In a century, Russia defaults on its foreign debt for the first time since 1918. The G7 weighs a price cap on Russian oil, as some members will now ban new gold imports. Plus, bear trap. Our latest MLive Pulse survey says investors should brace for protracted losses this year, but global stocks start the week in the green.
Now, Tom, let's take a look at the futures. Also, it's so nice to be reunited again. I feel like I haven't done the show with Tom McKenzie for at least a week, so it's always nice when we find each other again. DAX futures also finding each other. When you look at a lot of the support, it's probably from the tech in Asia, Tom. But then there's also rebalancing of portfolios at the end of the quarter. And I read that, I was like, what? It's the end of the quarter. This means the summer holidays are close. But so that could be, you know, quite supportive for equities.
Some holidays close. Good news if you've got some holidays lined up. Bad news if you've got the kids back from school. JP Morgan's Kalanovic, to your point, of course, saying that positioning in portfolios could see to further upside for equities this week. Continue to watch that after that solid gain on Wall Street on Friday, up 3%. Global stocks ending the week, one of the best weeks in about a month. European stocks also ended higher on Friday, and some of the concern about recession seems to be ebbing, but just for how long? That debate about recession versus inflation continues to play out, and whether or not indeed we have reached the peak in terms of the bond market bearishness. We'll see as money flows out of sovereign debt once again this morning. The CAC current gaining 0.5%. The FTSE 100 up 0.2. And over in Spain, gains of 0.2%. The geopolitics again front and center, of course, as we look to the G7 in Germany. We'll be getting the details this hour. Let's cross over and see how things are playing cross asset then as we look ahead to the open in the United States. Check in on fixed income and FX. The future stateside now pointing range bound. They had been in the green, so coming off a little bit. The US 10-year 315, just a little bit of money coming out of these sovereign debt now after that move that we saw towards lower yields last week, seeing a move up almost 3 basis points in the benchmark 10-year. The dollar index currently just softer by about 0.1%. Brent $113 a barrel. Not a lot of movement there, of course, broadly over the last few weeks. See some pressure on Brent. We continue to watch what's happening with the Iran nuclear deal and, of course, those discussions around capping the price of Russian oil. Francine.
Tom, if you look at the sectors that are on the move, you only have lonely energy that's actually down some 0.2%. Everyone else is rising. So we have basic resources right at the top. You also have materials. You have auto parts, financial services, chemicals. So they're all gaining between 0.2% and 1.8%. So not huge moves, but the only dissenter, do you like my term when it comes to MPC? The only dissenter right now in a sector full of gains is, of course, energy down. Actually, it's pretty much flat, Tom, so it's not even a dissenter anymore.
Okay, let's get to our MLive Pulse survey then, warning that investors should expect a protracted bear market, even if inflation starts to cool. We spoke with some of our guests about market risks in the second half of the year.
The risks of a downturn are increasing. Probably we're looking towards the end of this year. But the only silver lining, or one silver lining we'll point to, is that we don't yet see the scope for a deep or prolonged downturn.
You're going to have, I think, a slowdown. It could be a pretty significant slowdown. We're already seeing financial conditions tighten dramatically across the world, particularly in the U.S., and I'm very concerned.
We've raised our estimate probability of a recession in the U.S. I think we now think it's cumulatively about 50% chance, like a flip of a coin over the next couple of years. So I think that all those factors are going to mean a clear downturn in growth.
The war between Russia and Ukraine can get worse. We don't know what's going to happen with the relation between Israel and Iran. And there is the tension building up in Asia on the issue of Taiwan. So I would say geopolitical risk are the things I'm most worried about.
Risk that, Russia and Ukraine military altercation is going to intensify. That's a risk. Of course, that is also going to put further upward pressure on energy prices and makes the Fed's job difficult.
Big constraint, of course, in Europe is the periphery, not only recession risks overall, but the sovereign-related risks, which complicates it further for them.
Okay, let's get over to Bloomberg MLive managing editor then, Mark Cudmore, with more details on the survey. Mark, what really stood out for you then?
Well, first of all, this is the asset forecast, and I think it's important to emphasize these are the end-of-year forecasts. As you can see, it's lower across the board, lower for equities, lower for oil, and lower for bonds, higher yields. I think the fact that oil is lower is really interesting in the asset forecast. I should emphasize that we had more than 1,700 responses from Bloomberg clients in the survey, so it's really quite a large sample size. It's not much lower, though. We're not talking about a severe panic. There's not kind of some of the doom-mongering things there. But there is some path dependency. Do we end up at 3,700 versus via a trip to 3,300, or do we slowly drift down there? I got the impression from some of those comments there that people are quite worried about some of the short-term growth. And I want to bring you to some other forecasts we got from this survey. If you could bring to the next screen, you can see that perhaps the more interesting thing wasn't necessarily the asset predictions, it was the economic predictions. So, U.S. unemployment up to 4.2%. That's quite a jump from where we are now. We're at record unemployment across most of the Western world. That will normally goes along with the recession in the U.S., but it's not a big jump up. However, U.S. CPI, we asked what will be the reading in December, that's the November reading, year-on-year, U.S. CPI, median forecast for 6%. Now, if the Fed is still 3 times above their target by November, I think the market will panic and think they have to do a lot higher yields. So I think this is probably the thing that stood out to me most, Tom. If that's correct, I actually think yields will go much higher than the median forecast, and I think equities will go an awful lot lower. One final thing to point out, the consensus there, the forecast from the survey was 4% for China GDP, which is roughly in line with economists' forecast, but does clash with the fact that President Xi Jinping has reiterated their determination to reach the 5.5% official target. So maybe that might be an upside surprise if Chinese policymakers come through on that.
Mark, thanks so much. What a great MLive. Can you give us a sneak peek of this week?
So this week, I mean, I really probably shouldn't be giving you a sneak peek. We haven't asked the survey yet, but we are going to be, I can tell you what we're going to focus on. The theme of this week's survey will be on earnings, with a little bit of an FX tangent. But that's just the survey we're asking, so we're not giving any precious information.
Yeah, no precious information. Mark is basically saying, I can tell you, but then we'd have to unplug your TVs. So we're not going to do that. We're going to wait until it comes out officially. Our MLive managing editor, Mark Cudmore. Now, let's talk a lot more about the markets, maybe look at where yields are going with our guest, Elise Badois, head of equity research at EMEA at Citi. Elise, thank you so much for joining us. First of all, in terms of earnings and what you're expecting from earnings, have you had to reprice your expectation quite significantly lower?
Yes, good morning. Well, I think the backdrop remains one of, two really main focus for investors and balancing out right now, tipping points. So, further hikes, and at the same time, obviously having to price a slowdown, an economic slowdown. We do believe that earnings are probably still too high. So currently consensus is 11% for global EPS growth in 2022. And we think, looking at our GDP forecast, we should be more around mid-single digits, so probably 3%. So we expect more downgrades. We've seen some already. We expect more downgrade. Now, perhaps the positive sign is actually a lot of that is already in the price, those further downgrades. Even though they haven't happened, the market seems anticipated that. But all eyes now is on a massive risk shift, essentially from looking at rate risk, so looking at earnings risk as we head into result season. So we had all these macro big news. The market was massively macro-driven. It will remain macro-driven, but we anticipate, obviously, that the earnings season is going to distract a little bit from that.
Okay, and in which parts of the equities space are those downgrades most likely to be most pronounced then, Elise?
So when we look at the various sectors, we expect, obviously, cyclicals to be fairly affected and having to look at more downgrades. What we anticipate is that certain defensive sectors, so it's also important to note that actually the top line might remain quite healthy. And what certainly we've had in our internal meetings, what we recommend our analysts is to be really careful about top line, because top line will be obviously boosted by inflation, boosted by commodity prices, but also boosted by FX. And particularly if you sit in Europe, you have some of these multinationals which will have translation impact from, for example, a strong US dollar, and we expect it to get stronger. We expect the euro dollar to go to parity eventually. So all of that's going to mean a quite stable top line, but it's all about the downgrades at the bottom line. The biggest sectors, cyclical sectors in general, and probably healthcare and consumer, the defensive part of consumer staying stable.
Yeah, and I guess you're cautious on some of the more expensive, growth sectors. Elise, is there a part of the world that you're more cautious on when it comes to those?
Yes, however, I would flag, and this is really important, that actually, obviously, most investors are underweight growth, having obviously had to look at the correlation to real yields, and real yields have gone higher. But actually, as we head into a phase where perhaps inflation will go peaking and real yields will actually perhaps not be as going up as much, right? Yields going up, but not real yields. We might see some, and we've had a massive derating of growth stocks. We might go into a phase, okay, where we see we probably need to close some of these growth shorts, right? And this is where we probably would look at perhaps dipping a toe into maybe luxury goods to get some exposure. Maybe not tech just quite right, but obviously we need to think about closing some of those shorts in growth just to get a balanced portfolio and not be completely the value portfolio that we might have recommended a couple of a month ago.
Okay, interesting call. Elise Badwa from Citi staying with us. We'll get more of your calls after the break. Coming up, oil is trading higher as investors are on the outlook for any news from the G7, which is weighing a possible price cap on Russian oil. More on that story next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
back to the open, everyone. We are 12 minutes into the European trading day, and you can see we're getting quite a lot of support to stocks actually extending a climb that started in Asia, and that's thanks to support for technology stocks. Again, investors assessing whether inflation is now at the peak and recession can actually be averted. And then we're also getting some breaking news, Tom, on Naspers.
Yeah, Naspers currently up. You're looking at gains of around 11% now. They did shoot up about 15%. This is on the back of news that Prosus will fund its buyback with a 10-cent stake sale. So, of course, Prosus, the South African giant, says it will begin an orderly sales. And Tencent, of course, you've seen Chinese tech stocks lifted in Hong Kong doing very well today. Tencent currently lower by 1.5% on the back of this news, but Naspers gaining 15%. So some upside there for that tech name.
Well, yeah, it's quite a move, especially for a Monday morning when maybe a lot of investors didn't have their espresso yet. Oil broadly flat this morning, though. Investors on the lookout for any news from the G7, which is weighing a possible price cap on Russian crude. Now, fears of a recession were also continuing to hang over the market. Joining us now is Bloomberg's executive editor for energy and commodities, Will Kennedy. I mean, Will, good morning, first of all, to you. There's quite a lot of things going on. There was also an opinion piece, actually, in the French newspapers by a lot of the majors saying stop consuming so much oil. So there's definitely anxiousness about what happens in the next couple of months.
There is, and I think in Europe it's oil and it's especially gas. There's a lot of concern that flows from Russia, which have already dropped, will be very constrained coming into this winter. And frankly speaking, Europe won't have enough gas. And when you don't have enough supply, the obvious thing to do is talk seriously about how to use less. And I think that's what the French CEOs were saying in their letter.
When it comes to the question of just how quickly Europe is able then to compensate, and the significance of this push by Germany to kind of push back on its fossil fuel commitments, how do you play that into what's happening with the energy space with Brent now under pressure?
Well, Europe needs LNG. It needs to go out and buy LNG. It's going to have to do that for many years to come because this absence of Russian gas, we assume, has to continue as long as Putin's in power. So Europe has to make plans. That means probably investing more than they had previously thought in global gas infrastructure, LNG plants to both ship the fuel and then to unload it at the other end. And so what German tried to put in the communique is a signal to how the world has changed since Glasgow COP conference last year. It does seem, talking to the guys in Germany, though, that particular idea might not make it into the final communique because there was a lot of pushback because it is such an obvious U-turn on the climate front.
Okay, we'll continue to watch for that. And again, remarkable that a coalition that includes the Green Party is pushing for a refiring of coal-fired power stations because of the realities on the ground of the energy shortages. Thank you, Bloomberg's Will Kennedy, as ever, for walking us through the energy complex. Let's bring back our guest, Elise Badois from Citi, back into this conversation then. More broadly across commodities, particularly industrial metals, copper has been under pressure, and you've seen as well iron ore in the last few weeks as well. China will be part of that, but it's about recession fears as well. Elise, has the commodities trade now run out of steam for you?
So as it relates to equities and what's pricing, I think we look at various aspects. So for example, for basic resources, that remains our favorite value cyclicals actually at this stage. But I think it's the energy side that we're slightly more looking at. First of all, on the show, you've just talked about demand, obviously, from for the energy side, but actually the supply also matters, and we do believe that we may see more supply. That's sort of our strategy's view in commodities, and as we get that, we might get to slightly lower prices, which makes us perhaps less constructive on the energy sector. We are still recommending the energy sector, but we're slightly more bullish on the basic resources for that reason.
Elise, is there anything actually in the commodity space? And again, if you look at energy, basic resources, a lot of them are interlinked, but they seem to be going in different paths depending on the day. So is there anything that seems, undervalued or certainly still a good bargain as we transition, hopefully, to a greener economy?
Well, I think you have to be selective, obviously, and just here it's difficult to actually go through all the sector independently. But essentially, we are selective and we're recommending different values within the space, and that's why it's going to always be a picking exercise. However, I would say from a valuation standpoint that we believe that basic resources is probably a better play, definitely, than energy. That's definitely our stance.
Elise, let's take it regional then. You're overweight France and the UK. Just unpack the rationale for that.
So with the UK really and France, it's first of all, it's exposure to multinationals. I mean, you know, a lot of the index is multinationals that will benefit from a stronger dollar, and you know, obviously even out fears of recessions. But I think, you know, generally speaking, obviously it's two very different drives. So the UK will still be this value play that I've said matters in a rising real rates environment. We've got the correlation to real rates, which is really favoring value. With France, it's obviously you know, a lot of the index is obviously luxury goods, and I think I've said earlier that actually one of the ways to sort of cover your shorts in growth is actually to actually gain exposure to luxury goods, and that's the one growth sector we'd gain exposure to. So that kind of drives both. I also would flag that luxury goods has retraced more than has suffered more, if you want, in the derating than tech. That also drives it. So valuations are very attractive at this stage in both markets, but I think those tilts are the reasons why we're overweight.
Elise, thank you so much, as always, for joining us this morning. Elise Badois, they are the head of equity research and EMEA at Citi. Now, coming up, leaders of the G7 are expected to commit to providing indefinite support for Ukraine as they meet in beautiful Bavaria, Germany. That story's up next, and this is Bloomberg.
Welcome back to the Open. Happy Monday, 22 minutes into European trading day. You are seeing a little bit of optimism in these markets, still clinging on to the gains that we saw over on Friday. 0.7% is the upside you're seeing in the morning. Is this a dead cat bounce for the markets, or is something more fundamental going on in terms of the shift around concerns about recession? James Bullard of the Fed saying that the fears of recession are slightly overdone. Of course, some of the data out on Friday out of the US suggested that maybe inflation sentiment is starting to ebb off. Futures stateside points against a 0.3%. Francine, the NASDAQ futures gains of 0.3 after the very solid gains of around 3% on Friday in US equities.
Yeah, I mean, for the moment, they're holding pretty strong, Tom. Let's see what happens for the rest of the day and then the week. Leaders of the G7 are also expected to commit to providing indefinite support for Ukraine. Now, at their meeting in Germany, they're also said to be discussing a cap on the price of Russian oil. This comes as Moscow defaulted on its foreign currency debt for the first time in over a century. Well, let's get more now on the G7 meeting with our Europe correspondent, Maria Tadeo. Maria, I mean, the setting is beautiful. It's Bavaria in Germany, but then there's so many difficult conversations that they need to talk about, and I guess Ukraine is left, right, and center.
Absolutely, Francine. And this is a G7 that's completely dominated by the war in Ukraine. Of course, the Russians made sure to remind everyone the war is in a very active phase when they shelled the Ukrainian capital. The challenges for G7 leaders, they're enormous. It's about the war. It's about how to deal with Vladimir Putin, helping Ukraine, but also the energy, conversation, and food security. Now, Francine, I think overall the big takeaway so far from this meeting is that European leaders, of course, but also the United States, the UK, Canada, and Japan, they really want to send a message to the world that the big democracies of the world are together, that they will continue to back Ukraine on this. And in fact, we believe there will be a very clear commitment in the final communique saying there will be open-ended support for Ukraine as long as the war goes on. And by the way, Francine, I believe in about 45 minutes, President Zelensky will actually join the G7 in a video conference from Ukraine, so having a conversation with all of the G7 leaders gathered here in Bavaria.
Okay, so the symbolism is certainly there. When it comes to energy then, the discussions around a Russia oil price cap, how significant would this be? How close are they to agreeing this?
Tom, it could be very significant, and it is the most active discussion going on behind the scenes here. We have seen G7 leaders say openly, publicly, that it is very hard to stomach to see Vladimir Putin make the kind of revenue that he is doing with oil as a result of the very tight supply, but also some of the second round effects of sanctions. And they now say there needs to be some way to cap it, to put a limit on it. The United States has pitched this a number of times. The Italian Prime Minister, Mario Draghi, has also been very vocal about it, but the reality is the technicalities about this are very difficult to put in place in real terms. There's also a debate around what is the maximum price? How do you cap it? What is the limit that you put in it? And then how do other countries react to it? Are we going to see countries like India, which has really benefited from discounted Russian oil, join in this coalition? So there's a lot of questions on this. It is unclear whether by the end of the summit there will be a communique, an agreement on it, but it is really at this hour the most active conversation. And by the way, India and South Africa will be participating in the G7, so expect that to be a focal point here.
Okay, Bloomberg's Maria Tadeo at that summit, the G7 meeting, of course, in Bavaria, across everything that is happening there on energy and on that support for Ukraine, looking out for the president of Ukraine, possibly attending, of course, virtually at some point in the next 45 minutes, as she says. The gains across these European markets, 0.9% future stateside, pointing to gains of 0.4, between 0.4 and 0.5 on the S&P minis, 0.5 on the NASDAQ futures. And you've seen selling across sovereign debt. You're looking at gilts, for example, the 10-year down 5 basis points, up 5 basis points, I should say, as the sell-off there pushes yields higher. You're seeing a similar picture then, particularly at the long end of US Treasuries. The US 10-year, you're seeing a move up of about just a little over 3 basis points. Coming up, it is a big week for European inflation with CPI readings for Germany, France, and Spain. We discussed the latest with Anna Titareeva, European economist at UBS, and of course an important meeting happening in Portugal between the ECB. The BOE's governor will also be there, as will Jay Powell. Plenty more coming up on all things economics for the Eurozone, the UK and the US. This is Bloomberg.
Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Once in a century, Russia defaults on its foreign debt for the first time since 1918. The G7 weighs a price cap on Russian oil as some members will now ban new gold imports. Plus, Bear Trap, our latest MLive Pulse survey, says investors should brace for protracted losses this year, but global stocks start the week in the green. So, Tom, things in the market, I still can't get over the fact that Tom does not want to work out with me at the gym, but this is another story. If you look at markets, they're in the green, supported by technology stocks in Asia.
I can't believe you left it. How do I not respond to that? She wants me on reform. You get straight. It looks like a torture chamber or something.
Yeah, there you go. Pilates.
Yeah, there we go.
Pilates. And Pilates.
I'm not drawn in yet, but here we go. The market's 0.9% across the European benchmark. So building on the gains that we saw, of course, towards the end of the week last week. And just for the context, last week was the best week in about a month. So some optimism still clinging on. Is this a bear cat? Is this a dead cat bounce, I should say? I've been put off by Francine and all the reformer talk. Or is this a more sustained rally that we're going to start to see here? That debate, of course, about just where we are in terms of recession risks. James Bullard of the Fed saying that maybe the concerns about recession are a little over-egged. We're seeing gains of 1.4% on the DAX. The auto sector is certainly part of that. It's one of the best performing sectors. We'll break that out for you shortly. The FTSE 100 up 0.7%. Basic resources seeing some upside, particularly around iron ore and copper, even though the last few weeks there's been concern about what is happening with those basic resources on the back of things like those recession risks and, of course, the lack of demand, the softening of demand out of China. Let's switch it over, see how things are playing out. Talking of China, a good session, solid session over in Asia, and some of the data suggesting out of China that maybe things are starting to improve. You're starting to see a lockdown, easing of some of the restrictions in Beijing and Shanghai. So basic resources, top of the pile when it comes to your sectors. Again, that is a factor within the FTSE 100, 3.4%. Autos and parts also doing very well, up 2%. Tech, 1.9%, even as yields start to edge up across the curve when it comes to US treasuries, but also in the sovereign debt here in Europe as well. The bottom of the list, food and beverage, more defensive as well. The likes of utilities and healthcare performing slightly less well this morning. But overall, it is positive and optimistic, at least for the moment. Let's get to the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. Profits at Chinese industrial firms shrank at a slower pace last month, down 6.5% from a year earlier. That's as easing COVID restrictions allowed companies to resume production and improve logistics and sales. Separately, a Bloomberg index of 8 early indicators in China showed some improvement in June after 2 straight months of falls. A new poll suggests the majority of Americans disapprove of the Supreme Court's decision to overturn the constitutional right to an abortion. The survey by CBS News, conducted on Friday and Saturday, found 59% of respondents were against the ruling. Among women, 2/3 said they disapproved of the decision. Voters were split along party lines, with almost 80% of Republicans in favor. The US is rebooting its effort to counter China's Belt and Road Infrastructure program, enlisting the support of G7 leaders at their summit in Germany. The rebranded initiative sees the US calling on leaders to fund projects in middle and low-income countries to the tune of $600 billion over the next 5 years. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Tom Francine.
Laura, thanks so much. Laura Wright in London. Now, let's talk about inflation. It is a pretty big week for European inflation data, with CPI readings for Germany, France, and Spain. G7 leaders also been discussing how to coordinate action to tackle soaring price rises and ward off the threat of recession as they meet in the Bavarian Alps. Now, joining us to talk about inflation, the specter of inflation, how bad it will get, monetary policy responses, Anna Titereva, European economist at UBS. Anna, great pleasure to speak to you today. I mean, I also have a big inflation panel on Wednesday in Sintra, Portugal. I mean, do central banks now need to exchange notes on how not to get it wrong, or do they need to coordinate so that, you know, they don't put recession at the forefront, but kind of have more of a message to the markets?
I think that's partially what we're already seeing, that when we think about the balancing act between growth and inflation, central banks are largely focused on the inflation problem. But we also have to keep in mind that inflation drivers across countries are slightly different. I mean, in the Eurozone, for example, energy still remains the key driver, explaining around 50 to 60% of headline inflation.
So it's that centrality of energy once again. What is that doing in terms of second-round effects of inflation in the Eurozone, where up until a couple of months ago, many economists we've gone to the show would say not really coming through in terms of the data, but officials from the ECB now suggesting that they're starting to see signs of it?
Yes, so the second round effect is the key in terms of medium-term inflation outlook. And we've already a couple of months said that we started to see signs of wage growth, and that's the key factor that we're watching regarding medium-term inflation outlook. And now we are seeing more pronounced signs, with more countries showing nominal wage increases. Germany, given its large weight in the Eurozone, remains the key country to look for. And in Germany specifically, we think that the biggest increase in nominal wage growth is likely to happen in the second half of the year.
Are we looking at a bond crisis in Europe, given the pivot towards interest rate hikes?
So at the moment, sort of recession or crisis is not part of our baseline, but we did flag, especially taking into account a very disappointing set of activity data last week, specifically including June PMIs, and most importantly, the move of German government to the second stage of gas emergency plan, essentially taking us one step closer to the gas rationing. We said that the risk of recession or technical recession has certainly increased.
But the risk of a recession within the Eurozone, not the base case for the moment at UBS?
For the moment, it's not the base case. Also, purely sort of mathematically, we have very big statistical carryover effect for growth that should support the annual growth rates this year. We are particularly concerned about growth and activity in the second half of the year that could take growth in 2023 closer to zero.
And just in terms of the fiscal support you're starting to see come through from some governments in the Eurozone, to what extent is that going to offset some of the pressures that you're seeing as a result of the drag on energy?
So we think it's going to mitigate the impact, but it's not going to fully offset it.
Not fully offset it because, is there anything that would fully offset it?
At the moment, what we've seen is that essentially the pace of energy price increases more than offset all the temporary measures that governments have implemented. And that's part of the reason why we think inflation is going to move higher in the next few months.
And I know you think that recession is not really your base case, but one thing, we don't often define recession, right? It could be like long and protracted and ugly, or it could be light and quick. If we do have a recession, what type would it be?
I think at the moment it's quite tricky to say. I mean, we stick with the definition that technical recession means 2 consecutive quarters of negative growth. In terms of current dynamics, what seems to be likely that it could be consumer-driven recession, and we already see some slowdown in consumption given how high inflation has been.
And switching focus to the UK, where again we saw data out last week pointing to the weakness within the consumer and the retail part of the economy here. As we look ahead to the next meeting for the BOE and that decision in August, is it too early to start to price in 50? Can they go 50 basis points at the next meeting?
I think the way they introduced the option of acting forcefully clearly puts 50 basis point hike on the table. At the moment, it's not our baseline. We think they're going to continue with 25. But what we've seen from Chief Economist Bill, he clearly identified that if they do see signs of more persistent inflation, either through wage or price setting or inflation expectations, they will act.
Is there a worry, Anna, that the markets are always leading central banks?
In terms of pricing, that seems to be what's been happening, at least in the last few months. I think the key here was that markets got the inflation outlook right. And therefore, it looks, if we sort of compare the central bank action versus market pricing, it does look like that. But I think we'll need to see how inflation developments go from now, from on.
Anna, great insights, great analysis. Thank you. Not the base case of recession in the Eurozone. That is the view from Anna Todoreva, European economist at UBS. 50 basis points on the table for the BOE at the next meeting. Coming up, we will have more analysis of what to expect at the G7 summit in Germany. Top of the agenda, leaders of the group are expected to commit to providing indefinite support to Ukraine. That is next. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open, everyone. We are 42 minutes into the European trading day, and we're seeing nice elevated stocks for the moment, and they're really getting their cue from what we saw in Asia, driven by technology. A lot of the focus from investors is, yes, central banks will normalize, policy, but actually they'll be able to manage the economy through. Now, let's also take a look at what we'll be watching for this week. First of all, G7 leaders, of course, continue their three-day summit in Germany. On Tuesday, NATO leaders gather in Madrid, while the ECB then holds its annual forum in Sintra, Portugal. At the end of the week, Hong Kong marks 25 years since the handover to China, and state media reporting a visit and speech by President Xi Jinping. We also get Eurozone CPI data.
Okay, let's get back to that G7 meeting then in Bavaria. Leaders are expected to commit to providing indefinite support for Ukraine. At their meeting in Germany, they're also said to be discussing a cap on the price of Russian oil. This as Moscow defaulted on its foreign currency debt for the first time in a century. Joining us now is Leslie Vinjamuri, head of the US and Americas program at Chatham House. Leslie, good morning. Thank you for joining us. Of course, US President Joe Biden is on the ground for this G7 meeting. Boris Johnson, the Prime Minister of the UK, has warned about Ukraine fatigue setting in. Is this commitment from the G7 that we're expecting underscoring the strength and the unity of this group, or are we starting to see cracks now and a fraying of that support?
Well, it's undoubtedly both. There is tremendous unity, especially when cast in light of, prior to the 4 months of this devastating war. But of course, it has gone on for just over 4 months. The price is high mostly for the Ukrainians, but also across Europe and especially across the developing world. And as the war goes on, as the intensity continues at a high rate, but in a sort of focused geographical part of Ukraine, that this G7 is absolutely vital to, in a sense, rallying not only the G7 members to sustain that unity, which is very difficult with the backdrop of rising energy prices, of potential recession, of difficulties domestically, clearly in the United States, in France and Germany. And so really bringing that unity together and also demonstrating, and this is really key, especially today, we know that India, Indonesia, South Africa, Senegal are in those talks, demonstrating that the G7 not only is looking after itself and focused on Ukraine, but that it's cognizant of the price that the rest of the world is paying and has some sort of plan for addressing that.
Leslie, what does President Biden actually need from the G7? I think there was an idea floated that he was trying to get funding also to really rival the Belt and Road project from China, but that he didn't get enough money for it.
Well, we've seen the announcement that the United States has rebranded what a year ago in Cornwall was announced as a Build Back Better World initiative. Now that's called the Partnership for Global Infrastructure and Investment. It's meant to bring all the G7 members in. They're putting a price tag on that of $600 billion. The U.S. hopes to rally 200 of that and the EU 300. But remember, this is a very tall requirement. It's based on a model that is all about mobilizing private investment. And the plan, the details, the devil is in the details. The delivery will be extremely difficult, but putting it out there, both to signal the commitment to delivering on digital, climate, health, gender, these are the big goals for the G7, and to deliver infrastructure in those areas across the global south. Partly, of course, the backdrop is always as a counter to China's Belt and Road Initiative. But again, it's been 1 year since Cornwall. We've seen very little, some, discrete initiatives that are important, but really in the scheme of things, very little. And now in a context where the global south is facing disastrous food insecurity, food prices rising, as we know, energy costs rising. So really demonstrating, both a long-term commitment, which is what this partnership is meant to be about, but we need to see some concrete short-term measures taken to really reduce the food insecurity that so many people are now facing.
Leslie, that's the question of food security. When it comes to the broader security, particularly in the Asian space, what is your analysis, what is your take of what is happening within DC around the views on China? How much of a distraction Ukraine is proving to be, particularly on a week when Xi Jinping is expected to be in Hong Kong, which really just underscores what the Chinese would say is their success, Beijing would see as their success in terms of clamping down on insurrection, as they would describe it in Hong Kong, and of course the continued flights into Taiwan's economic zone. So just the ability for the US to juggle both of these commitments.
Well, clearly, there's pressure, increased pressure on, the sheer human resources that the Biden administration can marshal. But what we've seen from the very start is that, in fact, this war has galvanized the Biden administration to double down on its China strategy. Right before the war, it announced its Indo-Pacific strategy. It's since they've traveled to the region multiple times, announced an Indo-Pacific economic framework, invested in further Quad meetings. I think that what's really happening now is that this is demonstrating to the U.S., to the world, that we are in a period of intense geopolitical conflict, that the need really to take the threat from China and the question of the Indo-Pacific seriously is even more important. Obviously, people are worried about what signals are being sent to China when it comes to Taiwan. So I think, in fact, we're seeing the opposite. And as NATO begins to prepare for its meetings this week in Madrid, we will undoubtedly see NATO take, obviously, the question of the war in Ukraine very seriously and what this means for its eastern flank. But it will also be talking about China. So I think that there is no naivete about what this means, what this current environment means for the broader and arguably more fundamental geopolitical concern, which is that emanates from China.
Leslie, overall, how much is President Biden, of course, distracted with all that's happening back home? I mean, this is Congress, this is bills, this is, of course, Roe v. Wade. There's a lot going on, and I wonder whether it will change, of course, his foreign policy abroad.
You know, any president has to be able to have one eye on the domestic. This president has, much of his mind, and he's always said that even in his foreign policy, he's attempting to deliver it for Americans so that ordinary Americans can do better. But there's no doubt that the reversal of Roe versus Wade has brought people onto the streets, that the sense that America's democracy has never been more divided, more polarized, that women and people across the United States have lost a fundamental right. This is going to pull the president deeply into domestic politics. As we move towards the midterms, abortion rights are likely to be, if not the number one, the number two issue on the agenda. So clearly, the domestic situation is intense. And it's not going to lessen or abate. But this is a president who, as with any president, is surrounding himself by teams of people to work on that. And it's just not an option at this moment in time to, do an either-or strategy. The focus abroad, the focus at home, they're integrally connected.
Leslie, thank you so much, as always, for joining us. Leslie Vinjer-Murray, the head of the U.S. and America's program at Chatham House. Now, coming up, Russia defaults on its foreign currency sovereign debt for the first time in a century. So we'll have plenty more on that story next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are
are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open. We are 53 minutes into the European trading day, and you're seeing some pretty convincing gains now across the European benchmark of more than 1%. The futures in the US as well, solidly pointing into the green. S&P futures pointing 0.7%. Nasdaq futures up 0.8%. Every single sector here in Europe is in the green. Basic resources, technology, and autos leading up 2 to 3%. When it comes to bonds, the sell-off that we saw in the early part of the session starting to ease somewhat, but you're still seeing yields up, price down across the gilt space, German bunds and Italian BTPs as well. Just all up around 2 to 3 basis points. Francine?
Now, Russia has defaulted on its foreign currency sovereign debt for the first time in over a century. It's a culmination of ever tougher Western sanctions that actually shut down payment routes to overseas creditors. Now, joining us now for more on all this is Julia Morpurgo from our European credit team. Julia, great to have you on the program. So what exactly, I mean, this happened because of the sanctions, they just put it off, and then Sunday was the deadline. That's it, 100 days. How will investors react?
We're expecting not much to change. Bondholders could group together, call a default, and then begin legal action to recover at least a part of their money. But if they were to do that, they would have to navigate a really complex web of sanctions. So we expect most bondholders to opt for the wait-and-see option and see what happens with the war in Ukraine and with developments on the sanctions front. Also, if they were to take the risk and bring legal action, there will be an issue with enforcement because Russian assets are protected by diplomatic immunity, so that for sure will result in a tricky situation.
So maybe bondholders to sit this one out, at least for the time being. What's the Russian response been so far?
Yeah, so Russia is arguing against the definition of default. It's saying that it is willing and able to pay, and the only reason why creditors haven't gotten their money, it's because of sanctions imposed by the US and its allies. It is saying that it is a default that's artificially created. It is blaming the West for it, and it's calling the whole situation a farce.
But what does this mean? I mean, this hasn't happened in 100 years. I mean, is it a watershed moment? I guess, you know, from the sidelines, this was pretty much expected, really.
Yeah, I mean, it's really important to remember that the last default on Russia domestic debt was in 1998, and that was a watershed moment for markets that had global spillovers. We see that U.S. hedge fund long-term capital management had to be bailed out by U.S. financial institution because it had such a big exposure to it. Today, we think that the impact is going to be much more limited because the amount of sovereign debt issued by Russia that's foreign denominated, held by non-Russian residents, is only 20 billion. So definitely a limited size when it comes to the big picture.
Okay, Julia Morpurgo from our European credit team on that Russian default, first time, at least in terms of foreign-denominated debt, since around 1918. We got some live pics, I believe, of the Canadian Prime Minister and the Chancellor of Germany in Bavaria for this G7 meeting. There you can see the live pictures, and of course we'll be keeping across this. Maria Tadeo is on the ground for all the analysis on that G7 meeting. The gains in European markets around a little over 1%. Francine?
They've lost the ties.
They're taking their ties off.
G7,
there we go.
And we saw the family photo yesterday where, you know, they seem, I don't think they're relaxed given everything that's going on, but certainly from the outside, they've lost the tie.
It looks beautiful, doesn't it? But the challenges that they face in terms of that support for Ukraine and discussing a potential price cap on Russian oil, that is what we're looking out for as well. The communique and G7, of course, Maria today bringing us
maybe Tom will lose the tie. That's it for the European Market Open. Surveillance Early Edition is up next. We'll have plenty more, of course, on the markets. We'll look at inflation and we'll look at the G7. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
We are all unique. Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. As G7 leaders pledge indefinite support for Ukraine, Russia defaults on its foreign debt for the first time in over 100 years. We're live in Bavaria, Germany, for the latest this hour. Road to recovery. Early June indicators point to an improvement in the Chinese economy. Meanwhile, Xi Jinping prepares to visit Hong Kong this week for the 25th anniversary of the British handover. And as the crypto crash of the last few months, the industry's Lehman moment, well, as panic spreads across the sector, we look at the biggest threat yet to its survival. But first thing is first, we have some great stories to cover, but this is what the market is doing. European stocks, you can see, supported, gaining 1.2%. They're supported by technology gains over in Asia. Now, global stocks are extending gains. Again, this is after they posted their best performance in a month last week. After the turbulent couple of weeks that we've had, it's very clear that markets, or certainly traders, now have a bit of belief that actually whatever monetary policy does, whatever central banks put in place, they could engineer a soft landing when it comes to the economy. I'm looking at mining leading the advance on the Euro Stoxx 600. Chinese technology shares, of course, helping those Asian markets. And you can see the European technology Stoxx 600 gaining some 2.8%. Now, a lot of the story will focus, of course, on dollar strength. We have the U.S. Bloomberg dollar index and then Bitcoin 21,370. Now, if we look at the various countries in Europe and get that map up for you to look at the divergence, for example, between a Portugal and an Italy and things like that. One of the other things we're watching out for is, of course, a possible sovereign bond crisis because of fragmentation in Europe. I'll be going over to Portugal and Sintra, which is really the European Jackson Hole for central bankers, and we'll discuss monetary policy and inflation. But for the moment, you can see all of the European countries are holding on pretty strong, with the CAC 40, one of the biggest gainers, gaining 1.4%. Now, leaders of the G7 are expected to commit to providing indefinite support for Ukraine. At their meeting in Germany, they're also said to be discussing a cap on the price of Russian oil. Now, this comes as Moscow defaulted on its foreign currency debt for the first time in a century. So let's get more with our Europe correspondent, Maria Tadeo. So, Maria, war in Ukraine looms, of course, over this G7. What exactly is top of the agenda?
Yes, Francine, and this is entirely a meeting. And by the way, I believe there's a leader flying and hovering over our heads right now, going into the mountains, where, of course, have been gathering now for 2 days. And a lot of this dominated by the war in Ukraine, particularly after the shelling of the Ukrainian capital just hours before the meeting starting. Now, Francine, in terms of the communique, We are expecting today that G7 leaders will say, they will reiterate, there will be, quote, open-ended support for Ukraine on the military aspect, on the economic, but of course also too when it comes to potentially more sanctions on the Russian Federation as long as the war continues. The other big sticking point, and that is unclear whether there'll be an agreement by the end of the session, is that cap on oil prices. For G7 leaders gathered here, they recognize that it is very politically difficult, toxic, and hard to stomach the kind of revenue that Vladimir Putin is making as a result of the tight supply in the market, but also some of the second round effects of sanctions. And they talk about a price cap on Russian oil, but this is a very technical discussion. As you know, it is very hard to implement in real life, and they also worry about some of the big buyers right now, like India. Will they side on this big coalition? This is the most active discussion going on, but it's not clear whether an agreement will be reached.
So, Maria, you mentioned energy. How much of a discussion is, of course, about this price cap on Russian oil, and will all of the leaders agree on this?
Yeah, and this is an idea, Francine, as you know very well, that has been pitched a number of times by the United States. The Germans at the beginning, they weren't very convinced by it. Yesterday, the French say, quote, they don't oppose it at this stage. The Italians are incredibly vocal about the fact that you have to cap it. You have to put a ceiling on it. So there is some political momentum going into this. The fact that you have emerging markets like India, South Africa also participating on this could give it a much wider global momentum too, but they also recognize the implementation could be very difficult. The other big issue too, Francine, has to do with the gas story. The oil is seen as a moneymaker, but gas is a geopolitical weapon. There's a lot of concerns, of course, about Vladimir Putin unilaterally cutting off supplies from now until the end of the year, perhaps trying to sabotage the storage for European countries. Remember, they have been given a deadline. By November, they have to get their storage full so they're able to weather the winter, but it's unclear whether unilateral moves from Russia could put an issue on that and could threaten that.
Maria, thanks so much. Maria Tadeo there with the very latest, of course, from the G7 in Bavaria, Germany. Now, early June indicators point to a Chinese economic recovery, in particular after the lifting of the lockdown in Shanghai. Now, for more, let's bring in Bloomberg's chief Asia economics correspondent, Enda Curran. Enda, always great to start the week with you. What level of recovery are we actually seeing?
Well, it's mostly on the industrial and production side of things. There's a survey from Standard Chartered, for example, Francine, that looks at 500 small companies saying things are getting better. That stands to reason because the lockdowns and restrictions have eased to some extent. There's also a pickup in construction, also better car sales in the first few weeks of June compared to 1 year ago. But on the services side of things, still some pain there, as you would expect. The kind of contact-intensive sectors, so retail sales, catering and the like, are still suffering pain. But nonetheless, it suggests perhaps the economy is hitting a bottom.
So, Enda, we know that Xi Jinping will go to Hong Kong this week, of course, for the handover anniversary events, despite rising COVID cases. What message is he sending to Hong Kong?
Well, the question will be, Francine, what signal will he send about what role can Hong Kong play in China's economic development? What role will it play as an international gateway and financial centre that links China and the rest of the world? It's unlikely he'll talk about civil liberties or the political crackdown per se that has rocked Hong Kong in recent years. I think there will be focus on what kind of signal he wants to send to the world about where Hong Kong will go from here and what, just what role it will play in China's economic development.
And thank you so much, as always, Enda Curran there in Hong Kong. Now, joining us to talk about the economy and inflation and everything between is Sandra Philippin, chief economist at ABN AMRO. Sandra, thank you for joining us. And we need to talk about China, but overall, the Fed, and there seems to be a belief in the market now that central bank policy will change, but actually that they'll engineer a soft landing. Is that your base case?
Well, not that much for the Fed, because I think that the Fed is really in between a rock and a hard place. It has little room to do anything else but hike very, very strong. I think it might be a different story for the ECB, and that's what I would like to talk about, because I think there's something coming ahead for the European economy that we're not really completely aware of, and that is a potential Russian gas stoppage.
Yeah.
Depending on how far that will go, it will have also implications for what the ECB still can do.
Yeah, and we've seen also, for example, an opinion piece in a lot of the French newspapers by a lot of the French chief executives, energy companies saying, guys, you have to cut consumption now. So what happened? So do you expect actually actually some kind of gas embargo coming from Russia as something that will happen this year?
It's actually already underway. So if you look at the total gas consumption that Europe gets from Russia, it's about 150 billion cubic meters. It's already down by 60, so that's over 1/3.
Is this consumption or actually the gas that they're sending over?
So this
from
is the
Russia?
supply. This is the supply. Yeah, and so actually, while we're talking about embargo measures to kind of have sanctions against Russia, Russia is actually cutting gas as we speak. And the risk here is that it will not stay with this 60 billion cubic meters.
No.
We think that, I mean, it's hard to get inside the head of Putin, of course, but if you think, okay, what does he want to do? He wants to inflict economic damage on Europe, but he also wants to keep some supply going in order to kind of extract the rents from all the price increases that are going on. So we think that's most likely that he will cut another 50 billion cubic meters.
So Sandra, what does that mean for ECB policy? Do they have to to hike rates to a point where we could see a bond crisis?
Well, actually, if that would happen, if there would be a 2/3 gas stoppage of our total supply, it basically would mean that it would lower growth and increase inflation. No. And for the ECB, that would mean that, with the lower growth prospects in the medium term, inflation outlook would probably go down. At the same time, if unemployment rises, that's the same direction. And the energy inflation, I mean, the ECB has limited capacity to do anything about it anyway. So it might mean that actually the terminal rate that the ECB is going for might end lower.
Okay.
And I think that's good news for markets.
So do you see a wage spiral, actually, where we're seeing much more demand for citizens of Europe asking to be paid more?
Well, that's the question. I mean, on the one hand, of course, if inflation erodes real incomes, then there will be a wage demand at some point, and that could lead to the spiral. On the other hand, it could also go the opposite way, because if growth erodes like extremely and unemployment rises, then the whole story about wage growth is gone.
And so how do you see, I mean, at the moment, it seems very binary. As an economist, how do you take, and as market participants, how do you take the view on which way it goes?
Yeah, so we're quite pessimistic on how it will go. So we think that it will not stay with this 60 BCM that we're seeing now in the supply shortage. So we think it will go to about 2/3, and that will mean like potentially deep recession for Europe. And that also means the end of the normalization path as we have known it in our base case.
All right, Sandra, thanks so much. We'll come back to the idea that we could see a deep recession in Europe. Sandra Philippin, Chief Economist at ABN AMRO. Now, coming up, of course, it's a big week for European inflation. We have CPI readings for Germany, France, and Spain. So we continue our discussion with Sandra Philippin from ABN AMRO. That's coming up shortly, and this is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
the front loading of interest rate increases is a good idea in this situation, because what you would like to do, if we can, is nip inflation in the bud before it gets entrenched in the economy, get inflation back down toward 2%.
If we do have a recession, it's likely that it would be on the shallower end for two reasons. One, private sector balance sheets are in better shape than at the end of previous business cycles. And two, I think, while inflation is very high, I don't think it's as entrenched, certainly not as entrenched in expectations as it was in previous high inflation episodes, 70s, early 80s.
Well, St. Louis Fed President Jim Bullard, Goldman Sachs chief economist Jan Hatzius on the Fed's tightening path and what a potential recession might look like. Now, it's also a big week, I'll say, big week for European inflation. CPI readings due for Germany, France, and Spain. Well, we're back with Sandra Philippin, chief economist at ABN AMRO. Sandra, we were kind of game theorying about some of the things that could go wrong, and you were telling me, you know, if all of these things happen, including like a gas embargo, which, you know, we're seeing to start seeing that, then we could see a deep recession. I mean, that's when alarm bells in Europe. That's when alarm bells go out. I mean, a deep recession is a protracted recession, or is it just a very violent recession?
Well, it's very, very uncertain. So I don't dare to say how long that would take. But I mean, there are a lot of things building up here at the same time, right? We keep getting deeper in trouble. So of course we have the overheated situation already. We have the huge inflation in Europe. That basically means eroding real incomes because wages are not rising as fast. And at the same time, if you look at the euro dollar, basically buying energy becomes more and more expensive as the euro weakens. So that's already a terrible situation. And then what could happen on top of that, and that is a kind of the new base case that we're thinking about, is that Russia might actually be tempted now to kind of go fast with a blockage of a stoppage of gas to the European continent, and that would really cause a lot of trouble. Because if it goes further than it's already going now, then there will be severe shortages which drive up prices. But also, I mean, it will also could lead to industry stoppages. For example, in Germany, the 6 most energy-intensive industries, if they would face an industry stoppage, they would really cause a huge fallout. And because they're at the start of the German commodity chains, then the cascading effects through the rest of the economy might be huge.
Sandra, talk to me a bit about the U.S. So the U.S., again, you have this engineering, right, where Jay Powell seems to be focused so much on inflation that it's almost as saying, look, I'm going to do everything I can to keep inflation under control and to hell with recession.
Right. Well, actually, I wouldn't agree completely with the chief economist of BlackRock, because I think we actually might avert a recession in the U.S., but who knows? But the thing is that I do believe that the Fed has to move towards this 4% federal funds rate by February 2023, about that time. Because it's a very different situation in the U.S. I mean, the U.S. inflation is not only much higher, core inflation is not only much higher, but it's also much broader. And the danger is that it will get entrenched into inflation expectations. And then with that high levels of inflation, there might be a different inflation dynamics going on, which the Bank of International Settlements has warned about yesterday. And I think that's a real worry in the U.S.
So, Sandra, do you see them being much more aggressive, like 75 basis points hike? And I know we keep on saying, look, they're behind the curve. Yeah. But why are they so behind the curve? I mean, it was just a couple of months ago that they were saying, look, 75 basis points is off the cards. Yeah. And then they did it. Yeah. Yeah, why are they, I wouldn't know why are they behind the curve. I mean, I think the clear message is that they are, and that means they have no choice but to hike further. To get in front of it, and I don't think there are many routes around that. Sandra, thank you so much for joining us today. Sandra Philippin there, chief economist at ABN AMRO. Now let's get straight to the Bloomberg First Word News. Here is Leanne Gerrans. Hi, Leanne.
Hi, Francine. The U.S. is rebooting its effort to counter China's boats and road infrastructure program, enlisting the support of G7 leaders at their summit in Germany. The rebranded initiative sees the U.S. calling on leaders to fund projects in the middle and low-income countries to the tune of $600 billion over the next few years. Now, when Wimbledon's organisers say a ban on players from Russia and Belarus may only last for this year. The CEO of the All England Lawns Tennis Club, Sally Bolton, told Bloomberg the decision was difficult, but it was right for now. Wimbledon announced the ban in April, blaming what it says is unjustified military aggression from Russia. Some highly ranked players are exempt. And NASA has launched a rocket from Australia, the first time the space agency has used a commercial launch pad outside of the US. The rocket lifted off from the Arham Space Centre in Australia's Northern Territory late on Sunday in the first of 3 planned launches. NASA will use the rockets to investigate phenomena that can only be seen from the Southern Hemisphere. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, a CBS News poll found that 59% of Americans disapproved of the Roe v. Wade ruling. We discuss U.S. abortion rights next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The health and life of women in this nation are now at risk.
The voiceless will finally have a voice.
Termination of a pregnancy is just their opening act. It's just their front game.
I don't know what the limits of this court are going to be.
All civil rights are under threat.
It will save the lives of millions of children, and it will give families hope.
It will have huge implications, economic implications for families.
It takes away their ability to engage fully in the economy.
This decision is not about abortion. It is about power and patriarchal control over women.
It pushes it back
to state legislatures all across the country.
You will see certainly a little bit more voter intensity even in swing states and Senate races this fall.
A woman's right to choose, reproductive freedom, is on the ballot in November.
Well, officials reacting there to the Supreme Court decision to strike down Roe v. Wade. Let's get more with our Bloomberg reporter, Bruce Einhorn. Bruce, I mean, how much does this change the voting thinking of citizens in the U.S.?
It is hard to say at the moment, Francine. For decades, the political calculation has been that while there was a majority in favor of abortion rights, the people in favor of abortion rights weren't as passionate about the issue as the pro-life side. So now the question is, what will happen in the midterm elections in the fall? You know, we got a snapshot over the weekend, a CBS poll that showed that the ruling itself was highly unpopular. Also said that about 50% of Democrats now said that they're more likely to vote in the fall. So potentially this could have major implications, because up until now the assumption has been that the Republicans had a huge advantage in the fall because they were highly motivated to vote. Democrats, especially younger ones, would be much less motivated to go out and vote. Potentially now that could change things. Nobody really knows. We've never been in a situation like this where there's been a constitutional right that's been around for half a century that's then gone. So we're in uncharted territory here.
I mean, I guess, you know, when do we know, when you look at the midterms, when do we know which way it could go? Do we trust the polls ahead of them?
Well, midterms are still a fair way away, and inflation is high. There are all sorts of other issues that could come back into the forefront. That said, though, this is something that is out there, something that a lot of people who otherwise might have just sat out the election might now be more motivated to go out and vote.
Bruce, thank you so much. Bruce Einhorn, they're covering U.S. politics for us based in Hong Kong. Now, I know a lot of economists are watching us, and a lot of them have had to be sedated because in the last 20 minutes or so, the ECB has announced that the rate decision will be 30 minutes later from that vote in July. So watch out for that. It's 2:15 p.m. local time. Coming up, we talk about the G7 and Russian gold. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Lots happening on Wall Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that. Bloomberg Television. Top experts. Great questions.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
As G7 leaders pledge indefinite support for Ukraine, Russia defaults on its foreign debt for the first time in over 100 years. Road to recovery early June indicators point to an improvement in the Chinese economy. Meanwhile, Xi Jinping prepares to visit Hong Kong this week for the 25th anniversary of the British handover. And as a crypto crash of the last few months, the industry's Lehman moment, while as panic spreads across the sector, we look at the biggest threat yet to its survival. Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, first thing is first, so let's check in on the markets. We've had quite a couple of entertaining couple of weeks. Now, this is where we are today on Monday. Global stocks really extending some of the gains after posting their best performance in a month last week. Now, mining stocks definitely leading a advance in the Europe Stock 600. Chinese technology shares also helping an Asian equity index jump more than 1.5%. Now, remember, we are almost towards the end of June, so there's a quarterly portfolio rebalancing by institutional buyers, and that could be helping equities as investors assess whether inflation is cresting and recession can be averted. So we'll have plenty more, of course, on that. Also, a reminder that JP Morgan's Marko Kolanovic calling for stocks to rise 7% this week as pensions and sovereign wealth funds shift their exposures. If we look at the European map to see whether there's a divergence between a lot of the periphery countries and the ones more in Central Europe, there doesn't seem to be a huge gap. Industrial metals rebounding, oil, European natural gas prices rising, and then treasuries overall actually slipping, pushing the rate on the U.S. 10-year note to 3.14%. In general, yields have retreated from June highs, again, on these growth worries, and this is something we need to keep an eye on, and that we don't know whether this marks the end of the treasury bear market. It's definitely the live debate, dollar dipping. So we'll have plenty more, of course, on the market action, but now let's get straight to your Bloomberg Business Flash with Leanne Gerrans. Hi, Leanne.
Hi, Francine. India's Reliance Industries is reportedly in talks with global banks to raise as much as $8 billion for its planned buyout of pharmacy chain Boots from the American parent. According to Indian newspaper Mint, Reliance is in talks with Barclays, Deutsche Bank, HSB and Standard Chartered. The business runs more than 2,200 stores across the UK, along with some operations in other countries. Advertised graduate salaries have risen to a 6-year high this summer, up 7% on last year. According to research from job search site Adzuna, average pay for university leavers is just above £26,000. The number of vacancies, meanwhile, is up almost 60% on a year ago. Russia has defaulted on its foreign currency sovereign debt for the first time in over a century. The grace period for the two coupons on about $100 million of bonds expired at midnight last night. Russia called the default label a farce, saying it has the funds to cover any bills and has been forced into non-payment. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now, the last British governor of Hong Kong, Chris Patten, says he's worried about the city's future as a financial hub under increasing control by Beijing. Now, 25 years after Hong Kong's return to Chinese rule, Patten told Bloomberg's Stephen Engel how he believes things have changed.
Well, I think it's perfectly true that the Chinese communist leadership in Beijing has always wanted Hong Kong without Hong Kongers. And I think it's tragic that so many good, decent, honest people have left Hong Kong. I'm pleased that we've been able to provide them with a home here in the UK, over 100,000 in the last few months, and that they've also gone to Canada and Australia and the United States, Why have they been leaving? They see their future clouded by the fact that their children will have a different sort of education, one in which engineering the soul plays the most important part rather than educating children. They have to live in a society in which the rule of law is constantly undermined and under threat. They have, in effect, all the makings of a sort of neo-police state.
Now, I read as much of your new book as possible over the weekend. It's more than 500 pages, but 475 pages in, you talk about the destruction of Hong Kong. So I'm gathering the last few years, the last 3 years under Carrie Lam, it has sealed the fate of Hong Kong, or do you feel it can still resurrect itself as an international finance center?
Well, it's a real challenge. I wrote an essay at the end about what had happened since 1997, taking account of the fact that for 10 years, 12 years maybe, things went pretty well in Hong Kong, not perfectly, but the real problem has been since President Xi Jinping has been dictator in Beijing, and I think he regards the things that Hong Kong has always stood for as an existential threat to communist control. I'm asked again and again by young Hong Kongers whether they should come back to Hong Kong. I've asked my families whether they should come back, and it's not an easy answer to give. You can't really expect people to be braver than I would be.
You, of course, in your 5 years running up to 1997, did introduce very controversial electoral reforms to put the selection of lawmakers in the hands of Hong Kongers. On reflection, do you take any kind of blame for igniting something in Hong Kong that wasn't there before, that led to a politicization of this city?
No, I think it's a terrible bit of patronizing to think that people in Hong Kong didn't know anything about democracy, didn't know anything about running their own affairs, didn't know anything about due process, about fair judicial system and so on, that we impose those thoughts on them. It's absolutely ludicrous. People in Hong Kong, increasingly well educated, increasingly prosperous, seeing what was happening in other places, in Taiwan, in South Korea, and elsewhere in Asia, and they couldn't see why they shouldn't have much the same.
Lord Patton, I want to end on just giving you an opportunity to maybe reflect on what you remembered most of that night, that stormy night. Was there a sense of foreboding? I know when you got on the boat, the Britannia, you talked about feeling relief, but also happiness.
I hoped for the best. You couldn't leave thinking anything but that. But by and large, apart from some interference, things went on reasonably well. I think it's just in the last 10 years or so that things have taken a turn for the worse, as I think they have in China overall. But my overall feelings when I left Hong Kong were deep sadness at leaving friends and a place where I'd been happier than ever I've been in my life, and my family had been happier than we'd ever been in our lives. Hong Kong mattered a huge amount to me. I was extremely lucky to have the opportunity of serving the people of Hong Kong. I'll never forget how kind they were to me. I'll never forget how good the civil service were, full of honourable and decent and hardworking people. The whole community was like a Rolls Royce, and it should have just been allowed to go on purring away.
Well, that was Chris Patton, the last British governor of Hong Kong, speaking to our Stephen Engel. Coming up, Russia defaults on its foreign currency, a sovereign debt for the first time in a century. We'll have plenty more on that. We'll also go back to the G7. Our Maria Tadeo is on the ground there looking at everything that's going on. That's next. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the House for business's greatest minds.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, leaders of the G7 are expected to commit to providing indefinite support for Ukraine. At their meeting in Germany, they're also said to be discussing a cap on the price of Russian oil. Now, this comes as Moscow defaulted on its foreign currency debt for the first time in a century. Well, let's get more on the talks now with Wolfgang Muncha. He's president and co-founder of Euro Intelligence. Wolfgang, as always, thank you so much for coming on to make us smarter. Now, there are a number of nuances. First of all, there's full commitment from the G7 leaders on supporting Ukraine. Will they lose their population at some point if the cost of living goes up too much?
There is clearly a danger of that happening. We see signs of that happening in Germany, small signs of that happening in Germany. There is a limit, I think, to which Germany is ready to accept all the consequences of this policy. And we're seeing the Russian gas reduction, the flow in gas. It might just lead to a complete gas embargo. That will cause not only a recession, but it will also have the much more serious impact that many industries in Germany will no longer be operating. It would be very serious.
So, Wolfgang, talk to me a little bit about Germany. First of all, you have a chancellor that is, extremely committed. I think extremely courageous. Certainly, compared to what we've seen in the past from, I guess, other chancellors. Is there a danger that he goes in too deep? And also, by doing the Plan B, which is, we close certain sectors, this will have, unnecessary effects on the rest of Europe.
I think you're right. Scholz is committed to supporting Ukraine. But Scholz is also a very cautious operator. And he is, people have been calling him duplicitous and confusing in his messaging. He's trying to please too many people at the same time. I would assume it's a matter of that rather than some hidden agenda that might be driving him. So there is an element of weakness. His party is declining in the opinion polls, and his party still has the burden of having supported Putin in the past and having befriended Putin in the past, and that's now sort of in the process, politically of unraveling. Now, Germany as a whole has made that transition away from its relations with Russia, but support for Ukraine and and being in opposition to Russia is not something I would call unanimous in Germany. Right. It's something more like a 60-40 thing than like an 80-20 thing as it is in the US or the UK, for example.
Are we underestimating the price, actually, of economic growth to deal with this? And if you look at market commentary, we talk about inflation, a possible recession. Like, how deep could we see a recession in Europe?
That's right. It can be quite serious. And, I've been sort of arguing for some time that Putin's strongest weapon in this whole thing is gas. Yeah. Because he can actually trigger an economic recession. We don't even doubt this is the case.
But without a recession, or is it a technical recession?
It's not a technical recession. If he cuts the gas, we're talking like -3, -6, -8% stuff that is no longer technical. I frankly personally don't care about technical recessions. If it's down 0.1%,
doesn't matter.
It's just a statistical error margin and stuff. But this is real. Yeah. And it is ultimately in Putin's hand, given our dependence on his gas. So this is why it ultimately doesn't matter so much whether what we're talking about, oil or gold or all these other things that have been addressed at the summit. What is really important is gas, because that's the thing. It's not so much because gas is such a big earner for him. Oil is actually the bigger earner, but it is because of our dependence on gas and the effects it has.
And Wolfgang, I've had you on actually, countless times where we said, well, leaders don't get it. It's not that they don't get along; it's that they were lacking commonality. Do you think the war in Ukraine means that these G7 leaders are aligned? Or if things turn difficult, if economies start, going south, they'll break up again?
I wouldn't call it necessarily break up, but look at what we know. There's going to be a midterm election in the United States. The US politics might shift dramatically afterwards or even before.
Yeah.
There is potentially a very cold winter in Germany.
Yeah.
And again, it's not people freezing. I think the people in Germany will probably be the least of the problem. The big problem is industry. Industry that is reliant, a whole economic model that is reliant on this, and no alternative plan B.
But do we have, so let me look at some of the, the gas, I think it's natural gas trades, and you can see that they're, 5 times bigger than the long-term average. So I'll bring that chart up for you. But is there anything that other G7 leaders can do to help Europe? I know it's difficult, but can the US not send some of the gas to Europe instead of to the highest bidder in Asia?
They can, and they will. But the volumes, I mean, we've done the maths on gas. I mean, the Germans have also been trying to shop gas in Qatar and other places. Right. This isn't enough. This isn't going to help. The German gas plant basically foresees. They have some alternative supplies. They're now talking about the Groningen gas field being reopened again. But this is not going to help us through the winter. Yeah. This is the stuff. Beyond the winter, there's an awful lot of planning going on for the medium term. But for the very short term, which is the recession-relevant stuff, yeah, the US can probably do a little bit more. Right. But, Germany is a country, in terms of population, a third of the size of the US. No, the US cannot feather that.
So if I can, the prescription, I guess, in the short term, what is it from governments in Europe? Do they just need to support the ones that are losing the most?
There will definitely have to be an element of that. And frankly, also Germany will have to support others, because this is not just Germany, because Germany actually has most of the gas storage capacity, and others will want some of the share as well. So this will be a test of European solidarity between Germany, between the small and the small countries. But the main thing that I would foresee in case Russia cuts off, which is a scenario now that is at least a plausible one, there would have to be a very significant fiscal boost. There would have to be possibly a delay in the monetary easing. It would change everything.
Wolfgang, I know you look at ECB rate decisions very closely, and they've just announced that they're 30 minutes later from July. Have you had to take a day off to deal with that? 30 minutes later, what would the markets do?
That's right.
Okay, Wolfgang needs to be sedated because of that, so we'll get back to some of the politics. Wolfgang, thank you so much for joining us. Wolfgang Munchauer, president and co-founder of Eurointelligence. Now, Russia has defaulted on its foreign currency sovereign debt for the first time in a century. It's the culmination of ever tougher Western sanctions that shut down payment routes to overseas creditors. So joining us now for more on this, Giulia Morpurgo from our European credit team. So Giulia, thank you for joining us again. How exactly did this happen? And was it really a surprise? What does it mean for rating agencies?
Yes, so at midnight we had the expiration of a 30-day grace period, which had been triggered by the fact that investors are yet to receive payments on coupons that were due on the 27th of May. And usually you would have the ratings agencies come out and say, okay, we are now in an event of a default. But this has not happened because the ratings agencies, at least the major ones, are banned from covering Russia due to sanctions imposed by the European Union. So this is definitely a bit of a different event of default than usual.
So, Russia, Giulia, at the same time denies this as the default. So what does it mean for creditors? What does it mean for investors?
Yeah, so Russia is arguing that they're not defaulting, and that the only reason why the creditors haven't received their money yet is because of the sanctions that were imposed by the US and its allies. So it's saying that it's willing and able to pay, and investors just have to take their money, essentially. This doesn't change really much for creditors because their pockets are still empty. But it is arguing that this default is artificial, created by the West, and labeling this situation a farce.
So, Giulia, is this a watershed moment?
Well, the impact could be actually quite limited. First of all, Russia has been in a quasi-default status for months, so the markets have had time to adjust to the idea of Russia being really a black hole when it comes to financial markets. Secondly, the impact that foreign investors have is definitely limited. The last estimate are that foreign investors hold about 20 billion of Russian foreign-denominated sovereign debt, so that's definitely a limited size when it comes to the big picture.
Great, Giulia. Thank you so much. Giulia Morpurgo there from our European credit team. Now, coming up, how the $2 trillion drawdown may be the biggest test yet for the crypto industry. We have more on crypto. That's coming up next, and this is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now let's get to today's big take. For a generation of alienated techies, crypto's all-for-one ethos was its biggest draw. Now panic is spreading across the universe. That same ethos is now posing what may be the biggest threat yet to its survival. Well, joining us now is Emily Nicole from our crypto team and one of the authors of the big take. Emily, great reporting as always. So tell us more about this piece. What did you actually explore?
So in this piece, we took a look at why this crypto bear market, or as it's known to people within the industry, winter, is slightly different to those that have come before. The last one we saw lasted about 2 years, between 2018 and early 2020, and we're definitely firmly in that winter's territory now with the way crypto prices are forming. But there are a lot of things different this time compared to last time, and so that's really what we wanted to take a look at.
So why is it important to think about what's different in crypto, Emily, during this round?
So what's different this time will eventually basically let us preempt kind of how crypto might look when it comes out the other side. The things that we looked at specifically are things that are intrinsic to crypto. So one of the biggest things that crypto is heavily reliant on is an industry of leverage. A lot of traders will up their bets using leverage, making riskier plays, but that also causes contagion across the sector because a lot of these loans that people will take out, they use crypto assets to back them. And then when those crypto prices go down, those loans are no longer collateralized, they get liquidated, and it's usually more than one asset that you use. So it happens across the entire market all at once. There are a lot of different things, though, this time around that might help the crypto market for this winter. One of them being that they are now mostly backed by venture capital funding, or more frequently backed that way, rather than using their own tokens or Ethereum. And that means that they actually have real cash that they can rely on during a downturn, rather than just, being at the whim of the crypto market itself.
So what might crypto look like, Emily, on the other side of this bear market?
Well, we definitely know that companies are going to be a lot slimmer. We've had quite a few crypto companies say they're going to cut staff this year. There was a lot of a trend of, crypto companies making headlines because they were splashing that cash with abandon. You had them sign sponsorships with Matt Damon and Tom Brady, and even Cristiano Ronaldo. Binance signed him last week. So some of that kind of outward spending is going to tone down. Staff are going to get laid off. And the people that we spoke to, particularly actually those in VC, said that this is really going to be a bit of a seismic change in which companies have strong business models and which don't.
All right, Emily, thank you so much, as always, for some great reporting, for some great stories that you could check out on the website, but also on the Bloomberg terminal. Emily Nicole there from our crypto team. For more on Big Take story, go to Bloomberg.com or by typing NI Big Take on your terminal. Now, Leonardo Del Vecchio, the billionaire founder of Luxottica, has died aged 87. The Italian entrepreneur started a tiny optics workshop in the Dolomite Mountains and ended up as the undisputed world leader in eyewear. Well, global brands Ray-Ban and Oakley were among the scores of eyewear businesses which Del Vecchio bought on his way to the top. Our Tommaso Ebhart, our Milan bureau chief, also really wrote the life and of the entrepreneur, Mr. Del Vecchio. He was raised in Milan orphanage, where he struck out to the northern city and set up in the shop of Agordo in the Alps north of Venice. So his company wrote a series of acquisitions to eventually become the world leader in the industry. Essilor Luxottica, of course, a listed company, is both the world's top eyeglass retailer and its biggest producer of corrective lenses.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
However you get your news. This is Bloomberg Daybreak with Lee. On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
I think you're in this kind of like dead zone right now, but as you start to get more information coming in.
The risks are now finally being recognized in the equity markets particularly.
We think there's some vulnerability to S&P earnings.
There's a very significant risk of recession. I think it has gone up.
It's going to be very important to make sure that if we're going to go through a period of pain, we do slay the inflation dragon.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, June 27th. Our top stories today. Russia defaults on its foreign debt for the first time in more than a century as the G7 commits to providing indefinite support to Ukraine. Fallout from the Supreme Court's ruling on abortion. A new poll suggests that a majority of Americans disapprove, including 2/3 of women. And China's Xi Jinping keeps Hong Kong guessing. It's not clear whether he'll attend the city's 25th anniversary of Chinese rule in the midst of a COVID outbreak. Well, welcome to Bloomberg Surveillance. This is the Early Edition. I'm Danny Berger in London with Matt Miller and Kaylee Lines in New York. Anna Edwards is off today. And Kaylee, it feels decidedly risk on this morning, but I have to say this in the year 2022, it's hard not to question its staying power.
Yeah, and that's something we were hearing a lot of strategists talking about, Danny. Mike Wilson at Morgan Stanley, for example, says, yes, we may be seeing a bear market rally right now, but there's limits as to how far this can go. However, it did continue in Asia overnight. It was a broad update for stocks. The MSCI Asia Pacific Index higher by a little more than 1.5%. And really, that was a move led by big Chinese technology stocks. The Hang Seng Tech Index up 4.7% overnight, near a 4-month high. Though I would note there was one stock that sat that rally out, and that would be Tencent. The shares actually fell about 1.6% after Prosus, its biggest shareholder, sold some of its stake in order to fund a share buyback. Even though Prosus back in April of last year, after its last sale, said we won't sell anymore for 3 years. Going back on that now, and 10-cent shares down as a result. Finally, I would note you're starting to see some more optimism around the story in China, the easing of COVID-related restrictions, and signs that activity actually was picking up in the month of June. So that led a boost to iron ore overnight, up nearly 5 percentage points, just shy of $120 a ton in Singapore. But of course, iron ore prices are still down about 25% on a year-to-date basis, Matt.
All right, but a little bit of a risk-on feel to the markets. This morning we have, even after the big rally that we saw on Friday, right, up 3% in the cash rate on the S&P 500, we have the S&P futures up another 0.5%, and investors are getting out of bonds. That means the yield on the 10-year now rising to 3.15%. Almost 3.1489 if I go out 5 significant digits. And investors are also not piling into the dollars. They typically do when they're looking for safe haven, so that is not what they're seeking today. They're even buying Bitcoin, although it's only up 0.2% from midnight, but at 21,442, up against the higher end of the range that we've seen over the last couple of weeks. Danny, what do you see in Europe?
It is a pretty broad-based rally, I have to say, Matt, here in Europe. We are off some of the highs that we've seen this morning, but most regions pushing into the green, most of them over 1%. Germany outperforming 1.2%. It is basic resources, it's tech that's outperforming, hence Germany perhaps doing a little bit better this morning. Only region that's down is Italy. Some movers there, which I'll get into in just a moment. But to your point, Matt, of the dollar coming off, a little more risk appetite, you do see a stronger euro this morning, up 0.3% above 105. But within that rally, within that risk on, there is this deep-rooted feeling of fragility. Part of that is from the yield story. It's not just in the U.S. where yields are moving higher, it's also in Germany. We're looking at boons. Those are higher by 5 basis points. Do we get back into this feedback loop where perhaps we're risk on, yields go higher, and then we're worried about inflation again? So this violent circle happens where stocks go lower again. Another thing to worry about is natural gas. Russia cutting off 60% of their supply to Europe. That especially affects Germany. Of course, the German finance minister saying last week it could be a Lehman-like moment. Dutch front month futures, those are higher by another 3% this morning. And finally, Mediobanca, this is what's leading Italy lower, down by 3%. A sad story fueling this one. Leonardo Del Vecchio, the founder of Luxottica, the eye brand glassware maker, dying today, age 87. He actually is the controlling shareholder of Mediobanca, about 20%. So those shares moving lower. But Kaylee, in a case of perhaps markets are efficient, but I frankly don't understand them, Luxottica, the company he founded, which he owns a majority of, is actually slightly higher today. So Same story, a little bit of confusion there, but Mediobanco, at least the worst performer so far today, Kaylee.
Confusion in 2022, Danny? I haven't been confused at all so far this year. And there could be more confusion, or at least more events to watch in the week ahead. First off, of course, we have the Group of Seven continuing their summit in the Bavarian Alps. That, of course, is followed by a NATO leaders meeting later on in Madrid. Then the European Central Bank will be holding its annual forum on central banking in Sintra, Portugal, with top global central bankers to speak at a time of acute concern about inflation as well as growth. We'll also be getting some earnings from major retailers this week, including Nike after the bell today, as well as H&M, Bed Bath & Beyond, and Walgreens, all reporting results. And the latest OPEC Plus meeting on output will be taking place on Thursday. Finally, on Friday, Hong Kong marks 25 years since the handover to China, with a potential visit and speech by President Xi Jinping. The city's new chief executive will also be inaugurated, and we'll have a little more on that in a couple of minutes, Matt.
Yeah, very interesting story there, and it'll be great to get the details. Right now, I want to get to our coverage of the G7 summit with European correspondent Maria Tadeo and Washington correspondent Anne-Marie Hordern in Bavaria, Germany, where the meeting is taking place. So Russia has defaulted on its foreign currency sovereign debts, the first time in a century. Of course, we haven't allowed them to pay, so clearly that was going to happen. It's the culmination of ever tougher sanctions that shut down those routes, those payment routes, and froze central bank assets. Let's get more with Maria on that story first. Maria, clearly they see this as, I think Foreign Minister termed it, a farce.
Yeah, and of course the Russians have said today on the record the country has not defaulted. The issue here is that they have not been allowed to pay. That is their take on things. But of course, we know that when U.S. officials, European officials got together, particularly Mario Draghi, to the former head of the European Central Bank, designed this package to really target the Russian Central Bank. That was the idea, to really prevent Russia from doing business as usual. Now, that is for the Russian debt, but today here at the G7, there's also the political aspect from this. G7 countries, of course, over the weekend meeting here in Bavaria, and they have reiterated their support for Ukraine. In fact, we're expecting they will put it in writing in a statement today by the end of the meeting, saying there will be, quote, open-ended support for Ukraine as long as the war continues. And of course, Matt, Russia made sure to remind everyone the war continues when it shelled the Ukrainian capital just a few hours before leaders gathered here in Bavaria. So the war really dominates this entire meeting.
All right, Maria, thank you so much. And it sounds like the hills behind you are quite literally alive with the sound of music. Bloomberg's Maria Tadeo. Let's continue the story there. President Biden rebooting his efforts to counter China's Belt and Road Infrastructure program, enlisting the support of G7 leaders. Let's get to Anne-Marie Hordern for the details. So, Anne-Marie, what is Biden hoping to get out of this G7 meeting? All right, Anne-Marie, I think we might have some issues there with your sound. But Kaylee, of course, this is a really big meeting in G7. It also comes amid a gas crisis in Europe, amid the war. So usually an event that doesn't have a lot of market implications, Kaylee. It certainly could this time around.
Absolutely, which is why all eyes are on Bavaria this week and later on in Madrid for the NATO meeting, as we think about what further these alliances can do in order to combat the war in Ukraine, as well as the ripple effects of it. And of course, for President Biden, there is a bit of domestic concern as well in the aftermath of the decision on Friday from the Supreme Court to overturn Roe v. Wade, which is something that the president clearly must have on his mind, even as his eyes are on foreign policy, Danny.
Exactly. So much to pour over. Let's get back to Anne-Marie and Hordern to help us do just that. So, Anne-Marie, we're just discussing what Biden was hoping to get out of this meeting.
Well, I think first he's really hoping to just make sure the unity amongst these G7 partners is strong, because at the same time they have this commitment to Ukraine and they are putting harsh penalties on Russia. One coming out of the G7 is that they are going to ban the import of Russian gold. At the same time, they want to make sure that they are still able to try to protect their economies, because we do know that every leader here at home is dealing with a very difficult domestic agenda, because they have higher inflation, higher consumer prices across the board, also including grocery bills. So that's really part of the president's agenda here. When it comes to the Supreme Court decision, I heard Kaylee mention that This is something that is certainly looming large on the president while he's here in Bavaria speaking to foreign leaders. He talked about this right before he flew on Air Force One coming over to Europe. He was asked if he thought the Supreme Court was broken. He said, I think they've made some terrible decisions. And it's quite awkward for the president in the sense that these leaders know that his party backs expansion of women's reproductive rights. But at the same time, when that Supreme Court decision came out, a number of these leaders had a lot to say about the state of politics and where the U.S. is going. Most notably, UK Prime Minister Boris Johnson said this is a step backward. So domestic issues are certainly looming large on this president, as well as the other G7 leaders as they meet here in the Bavarian Alps.
Anne-Marie, thanks so much. Bloomberg's Anne-Marie Hordern there reporting from Bavaria, Germany. Now from the EU to China, where Tencent plummeted after protests announced plans to sell more of its $134 billion stake in the Chinese internet giant, that all to finance a buyback program. Now that move reverses a pledge to hold on to the full shareholding. Bloomberg's Tom McKenzie joins us now for more. So I think they pledged something like 3 years. They wouldn't touch the stake. So how bad is this for Tencent?
Yeah, a bit of a U-turn from Prosus. And there's a bit of context. I'll just briefly touch on it. So Prosus is the e-commerce giant. It was spun off from Naspers, and it has this idiosyncratic story, which is it has this massive stake in Tencent. It's the biggest holder of Tencent shares, 134 billion. Yes, they said they weren't going to sell it down. Now they've reversed that because they say they want to fund share buybacks of their own stock, which is valued, if you strip out the Tencent holding, at essentially negative, because 134 billion, the valuation, that is of the valuation of their Tencent holding, their total valuation, their assets, far less than that. So they want to boost the valuation of their own assets with these share buybacks. So that's the idiosyncratic story around this Dutch e-commerce company, which happens to have this massive stake in Tencent from its legacy to Naspers. There's the bigger story, though, about what signal it sends around Chinese technology, of course. At a time, you've been discussing this, as some within the markets are turning more positive because you've started to see the foot on the throttle, or at least the neck of Chinese tech being slowly taken off by Chinese officials, the likes of JP Morgan increasing their exposure through their China fund to Chinese technology. The signal that this sends, potentially, there's a little bit more uncertainty about where this goes in terms of regulatory clampdown, because Naspers and Prosus have great insight, of course, into what happens within the tech space of China. So some will take this as a negative.
Speaking of uncertainty, I see that the South China Morning Post, at least, is saying Xi Jinping is going to visit Hong Kong, which is interesting in that it's his first trip outside the mainland since the pandemic began, and that we still see real COVID issues in Hong Kong. What do we know? Have we been able to confirm this trip?
Yeah, you touched on a couple of the key points there, Matt. No, we have not been able to confirm it. The language is making it slightly open-ended as to whether or not, or unclear as to whether or not the president actually ends up in Hong Kong. The importance, as you say, the fact that this would be the first overseas trip, yes, within the boundaries, of course, and the territory of China, but the overseas first outside a mainland trip for Xi Jinping since January of 2020. Then there's the COVID-0 policy, and increasingly you're seeing divergence between Hong Kong and the mainland when it comes to COVID-0. Hong Kong has started to relax some of those curbs. As a result, you've seen about 2,000 cases. You've even seen cases within the incoming government of Lee, who, of course, is expected to be signed off by President Xi Jinping on Thursday and Friday. There's some reporting that he's going to visit the city but stay in the cross-border city of Shenzhen. Other reports suggesting that maybe he's going to do it virtually. So we haven't nailed this down completely, but there's a symbolism, of course, of President Xi Jinping being in the city, okay, for the first time as well since the national security law, and of course the undermining of many of the freedoms that Hong Kong and Hong Kong citizens and companies have been used to. So we continue to watch this.
Absolutely. We'll see whether or not he does make an appearance, virtual or physical. Bloomberg's Tom McKenzie, thank you so much. Now, I want to get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S., and I really do want to stick with that China story first, because Tom was alluding to the fact that people are growing more positive on Chinese technology stocks. You saw that in the overnight Asian session in which all of those shares rallied. So no surprise, you are seeing that feeding through into some of those ADRs here in U.S. trading. The likes of Alibaba up the better part of 2% before the bell. You're also seeing some relief coming into the metals metals complex today with those prices going higher. So stocks tied to that are doing fairly well as well. One being Freeport-McMoRan, which is higher by about 2.3% before the bell. And finally, I actually have a pair of stocks I want to talk about. They're related in the fact that it's the same Goldman Sachs analyst, William Nance, adjusting his ratings that are moving the shares. On the one hand, he upgraded Robinhood from sell to neutral. That stock is up about 4.4%, but he downgraded Coinbase to sell with a $45 price target. That would be 28% downside from Friday's close. He's talking about the continued downdraft in crypto, how that could weigh on revenue. So as a result, that stock is down about 3.5%, trading at $60.54 a share. And remember, Coinbase, Danny, already has lost about 3/4 of its value just on a year-to-date basis.
Yeah, especially considering all those reports of some labor changes, employment changes over there. Of course, we'll talk about crypto later on the show, but first, coming up on their annual report, Augustin Karstens, Bank for International Settlements General Manager, on what inflation means at this moment and what central banks should be doing about it. And is it crypto's Lehman moment? How the $2 trillion drawdown may be the biggest test yet for the industry. You can read about it all in today's Big Take, and we'll discuss it with Glenn Goodman, eToro cryptocurrency consultant and the author of The Crypto Trader. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Unique. Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Welcome back to Bloomberg Surveillance. This is the early edition simulcast on both radio and television. I'm Matt Miller in New York with Kaylee Lyons, Danny Berger with us out of London. Now, I'm looking at a chart that shows the underperformance of gold, which for you, those of you viewing on television, is in white here. Radio listeners obviously don't care the colors, but the commodity index in blue has really come back and outperformed. Now, the reason is clear. As Kaylee just pointed out to me, obviously oil has stomped on gold's performance since the pandemic and since the invasion of Ukraine by Russia. Joining us right now is Eddie Vanderwald of Bloomberg's Live to tell us if this may change, because it looks like gold may be banned out of Russia as well. Eddie?
Yeah, so you know what? That's a really interesting narrative. Gold obviously is a little bit under pressure with central banks hiking rates, fighting inflation. So that narrative is weighing on gold. Now, the thing with the ban of flows out of Russia. On the margin, supply really doesn't matter that much for the gold price because pretty much unlike other commodities, which once we've produced it, we consume it, it's gone, we've got to produce it all over again. With gold, pretty much all the gold we've ever mined sits above ground in a vault somewhere, or as jewelry that can be recycled. So if you cut off a part of the supply, you don't change the balance of that of what is available above ground that much. So this is not really going to move the price that much for gold.
I have to say one of my favorite fun facts is all the gold in vaults near where we are right here at Threadneedle Street at the Bank of England. Speaking of the Bank of England, you and the team put together this great MLive pulse survey every single week. I mean, it feels really, really bearish UK, the results you got from last week.
So yes, the market is extremely bearish on the UK. This week, however, we're looking at broad asset outlooks, and I think what people are telling us is that they're very bearish on the outlook, for most asset prices, but not so much on volatility. They're expecting prices to start bottoming out, but absolutely on the UK, you can't find a pound bull anywhere.
Yeah, Eddie, I think we would all welcome some calmness when it comes to the recent volatility. Eddie, thanks so much. Eddie Vanderwalt of Bloomberg MLive. And for more market analysis, check out MLive Go on your terminal. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Danny Berger in London. Anna Edwards is off today. Now, keeping you up to date with news from around the world, here's the first word. In China, the COVID-0 policy appears to have the spring outbreak under control. New infections have been under 100 a day for almost 2 weeks. No major cities are in a widespread lockdown, and restrictions in Shanghai and Beijing continue to be lifted. Analysts say that the plan by some G7 nations to ban new gold imports from Russia is largely symbolic. That's because the industry has already taken its own steps. The London Bullion Market Association removed Russian gold refiners from its accredited list in March. Meanwhile, other commodities are hitting powerful headwinds after a first half dominated by the supply turmoil and inflationary shocks. Bloomberg's index of spot commodities has fallen 13% from a record. Still, Goldman Sachs says prices haven't topped out yet. In a new note, Goldman analysts say that growth and demand are slowing down, but not falling. And in sports, the Colorado Avalanche won hockey's Stanley Cup for the third time in the team's history. Colorado beat Tampa Bay 2-1 to win the series 4-2. Tampa Bay had won the last 2 National Hockey League titles. And as for the Conn Smythe Trophy, which goes to the MVP of the tournament, the winner, Matt, was Cale Makar, who's just 23 years old. He scored 29 points in just 20 Stanley Cup playoff games.
Wow, amazing achievement, and congratulations, I guess, to Colorado. I have to say I didn't watch any of the games.
I didn't either. Same. I'm the worst kind of hockey fan. I'm not only fair weather, but fair weather for the Caps. Unless the Caps are doing well, I literally pay no attention whatsoever. All right, well, coming up, something that I know we're all paying attention to. It's the annual report. Augustin Carson's Bank for International Settlements general manager, their latest report on inflation, and at the same time saying that central banks need to step it up, despite the fact we've seen jumbo rate hikes. Is it enough? Do central banks need to keep pushing the envelope, even if we get closer to a recession? All of that next. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. it means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition, and here's what you need to know. Russia defaults on its foreign debt payment for the first time in more than a century. That's as the G7 commits to providing indefinite support to Ukraine. A new poll suggests that a majority of Americans disapprove of the U.S. Supreme Court's decision overturning the constitutional right to an abortion. According to the CBS News survey, 59% oppose the ruling. That includes 67% of women. And China's Xi Jinping keeps Hong Kong guessing. It's not clear whether he'll attend the city's 25th anniversary of Chinese rule in the midst of a COVID outbreak. Hong Kong recorded almost 2,000 new cases on Sunday. I'm Danny Berger in London, in for Anna Edwards. Matt Miller and Kaylee Lines are in New York. And Matt, the rally continues starting into a new week, but as yields move higher, I can't help but wonder, does inflation become the scare again, or as recession is on our minds, can stocks really continue to rally?
Yeah, very interesting question. I think a lot of market participants are grappling with the same thing. It looks like the answer right now is that investors doubt the central bank's resolve. The S&P futures are up another 0.5% after the big rally that we saw on Friday, 3% in the cash trade, and investors are selling 10-year debt right now, the yield climbing up to 3.16. The dollar index is also lower, so no one's piling into the dollar for safe haven as we have seen so often of late. And then Bitcoin is rising slightly. It's only up 0.1% since midnight, but it did pretty well this weekend, up to 21,411 and rising with that positive sentiment across other risk assets. Kaylee, what do you see in terms of the pre-market movers?
Well, I'm taking a look at technology, not just U.S. tech stocks, but Chinese ones as well. We already talked about on this program how tech really rallied in Asia overnight, and that is continuing when it comes to some of those ADRs here in early hours in the United States. The likes of JD.com up 4.6%. You have Baidu up by about 2.4% as well, but those U.S. tech stocks are also continuing their gains that we saw last week. Tesla is up the better part of 2 percentage points, and you also have NVIDIA, the chip maker, higher by about 1.4%, Danny.
Well, European stocks also moving higher this morning, Kaylee, but I think the cross-asset picture is even more interesting because it indicates perhaps some fragility about this rally. We do have the euro higher. That's reflected in what Matt was talking about. Risk on means not necessarily that bid for havens, up 0.2%. But another thing we have to contend with this week, we're going to get a bunch of flash inflation readings for Europe, expected to culminate in a record 8.5% CPI for Europe. What does that mean for the ECB? They're meeting in Central along with other central bankers this week, and their need to continue to hike rates. Now, yields on the German 10-year yield, those are going higher, up by about 6.5 basis points. Do we get to that point where higher yields once again spook equity markets? We're not there yet. What also might spook markets is the natural gas and more broadly gas picture in Europe. Russia has cut off about 60% of gas flows to the region. Germany especially a problem. Will they have enough energy supply to get them through the winter? We're looking at Dutch front month futures, those up 2%. And finally today, sad news, the passing of Del Vecchio, the founder of Luxottica, the Ray-Ban maker. He owned a majority of Mediobanca. It's an Italian bank, about 20% of it. So with his passing, there is a market consequence as well as a tragedy, of course, for him and his family. But Mediobanca, Matt, that stock moving down by 2.5%.
All right, very interesting story and legacy there. Let's get back to the markets here in terms of tail risk. What are we looking at in the second half? Top strategists and economists shared their predictions with us.
The risks of a downturn are increasing. Probably we're looking towards the end of this year. But the only silver lining, or one silver lining we'll point to, is that we don't yet see the scope for a deep or prolonged downturn.
You're going to have, I think, a slowdown. It could be a pretty significant slowdown. We're already seeing financial conditions tighten dramatically across the world, particularly in the U.S., and I'm very concerned.
We've raised our estimate probability of a recession in the U.S. I think we now think it's cumulatively about 50% chance, like a flip of a coin over the next couple of years. So I think that all those factors are going to mean a clear downturn in growth.
The war between Russia and Ukraine can get worse. We don't know what's going to happen with the relation between Israel and Iran, and there is the tension building up in Asia on the issue of Taiwan. So I would say geopolitical risk are the things I'm most worried about.
Risk that, Russia and Ukraine military altercation is going to intensify. That's a risk. Of course, that is also going to put further upward pressure on energy prices and makes the Fed's job difficult.
Big constraint, of course, in Europe is the periphery, not only recession risks overall, but the sovereign-related risks, which complicates it further for them.
So the Bank for International Settlements is out with its own outlook, its latest annual economic report. The BIS says the world economy risks entering a new era of high inflation, with central banks need to keep in check. Joining us now for the more on the report is the BIS Settlements General Manager Augustine Carstens. Augustine, thanks so much for your time this morning. I wonder what your forecast is now for inflation. How do you see it panning out with central banks now starting to act?
Well, thank you very much for having me. There are different dynamics going on right now. Certainly, some of the causes that have generated an increase in inflation are still alive. Part of them, the supply chain bottlenecks, commodity price pressures. To some extent, the policy impulse is still there, and at the same time, expectations have started to be adjusted. Some pressures on the labor market are being more obvious, but the good thing is that monetary policy have started to act in a forceful way. Now we know that there is some lag between the effect of monetary policy on inflation, but we're starting to see some adjustments in expectations. So what is important right now is for the actions that the central bank to persist and enact forcefully in a flexible way. I think that we are at the beginning of the effort of turning inflation around given the efforts of the central banks. So far so good, but we still need some ways to go forward.
In terms of the possibility of central banks raising too much and driving economies into a recession, how much is that a worry for you?
Well, I mean, we believe that they have started the process relatively early. We have a relatively good starting point from the point of view of the resiliency of the economy. Another factor of risk that could make deeper the impact of the monetary policy actions into activity, namely the response of the financial market, or the nexus between the financial sector and the real economy, hasn't shown signs that are of concern. So there is a possibility that it can be pulled off without a major impact. I mean, yes, with an impact on GDP, but not going all the way into a recession. But it's a narrow path, and certainly we cannot discard the possibility of a hard landing, although from our point of view, is relatively small at this stage.
Okay, so there is still a path to a soft landing, even if it's narrow. How does your view of history inform that? What similarities do you see for this moment in time relative to the 1970s, for example? Well,
in 1970s, the shock to the oil shock was far bigger, and the energy dependency on oil was also much bigger. In this case, the oil shock is smaller, but probably it's broader. We have not only energy, but we also have some commodities. some basic materials or inputs for production that have been affected. So it's a little bit broader. At the end of the day, what can make the difference, and I think it will make the difference, is that the monetary policy frameworks, the credibility on the central banks is much better set up today to fight inflation than before.
Are we underestimating, though, Augustin, the staying power of this energy rally, considering China hasn't even come back on the map? What happens when they do? And is it foolish for the market to start to turn around in their inflation expectations, given that likelihood?
Well, you know, the slowdown in economic activity will also reduce the demand for energy. And there is a very agile process of substitution there from many energy sources, and additional sources of supply can come into the market. No, I think that this is not the first oil shock that we have seen. So I think it's very hard to call, based only on oil, the possibility of a recession.
Okay, finally, I want to ask your thoughts on something that may be considered a commodity or a currency or just a correlated asset to equities, but cryptocurrencies. We have seen a dramatic decline and a deleveraging in this space. I'm wondering how you view the collapse in the cryptocurrency space overall and what threat it may pose to broader financial stability.
Well, as we have said for quite some time here, stable coins, the vast majority of them are all bought stable. They depend on their value on trying to import their valuation on other assets, and the backing is not reliable. And in some cases, there is not even that backing, as was the case with Terra Luna. In addition, many of these currencies are used only for speculative processes, and through DeFi, the possibility of leveraging exponentially is very, very high, and therefore the financial risks that are being taken there are huge, and this was meant to happen. I mean, this was not difficult to anticipate that at some point this type of actions were going to happen, and it's very likely that they will continue to happen because they have these type of currencies have inherent vulnerabilities.
Okay, and of course, cryptocurrency stabilizing this morning, but to your point, Augustin, how long will it last? Augustin Carson's there from the Bank for International Settlements. Thanks so much for joining us today. Now, coming up, we're going to continue the crypto conversation. Gleb Goodman, eToro cryptocurrency consultant and the author of The Crypto Trader, joins us next. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Danny Berger in London. Anna Edwards is off today. For a generation of alienated techies, crypto's all-for-one ethos was its biggest draw. But today's Big Take shows how that same ethos is posing what may be the biggest threat yet to its survival. Panic is spreading through a market that has gone through several major downdrafts in its very short life. Joining us now is Glenn Goodman, eToro cryptocurrency consultant and the author of The Crypto Trader. Glenn, great to speak with you today. You think that this crypto crash is just part of a broader story. What is that story?
Really, that's the thing, is that usually I'm looking pretty closely at specifically crypto-related indicators, crypto prices. But over the last few months, I've been looking more and more at the NASDAQ in particular, but the US markets in general. Because frankly, the correlation between the two, between the crypto markets and even the S&P, has become very, very close. But as I say, particularly NASDAQ and tech stocks. And I think this is partly because during the big crypto boom last year, we had this situation, of course, where more and more institutional investors were getting involved. Before that, you know, okay, years ago, Bitcoin was a kind of hobbyist's thing, and then lots of retail traders got in, and then finally the big or big-ish institutions arrived in 2020 and 2021. And they see it differently from the Bitcoin purists. The Bitcoin purists, of course, believe in the story of Bitcoin as the currency of the future. Some people believe that it's even going to be the next global reserve currency. But the institutional people don't necessarily believe that. They were in it for speculative reasons in many cases. And so as a risk-on asset, when they start getting worried about the economy, particularly the US economy, then they start selling. And so if you look at the ups and downs of the NASDAQ and you look at the ups and downs of Bitcoin, yes, the Bitcoin and crypto ups and downs are more exaggerated, but they're still usually in the same direction.
I wonder what you think about retail investors that just got involved for FOMO reasons, right? I mean, the initial Bitcoin purists were very libertarian, didn't want to see any kind of regulation, thought this was a great way to, in a sense, fight the state. But the people who got on board, you know, the Wall Street bets kind of crowd, if you will, they were just in it for the money as well.
Yeah, it was really frustrating to go through that because you know, with my eToro hat on, you know, I'm talking about the big institutional investors, but with my writer of the book, The Crypto Trader hat on, I had a lot of readers writing to me and reading my book during the boom and then writing to me and saying, we're getting in now, we're getting in more now, we're getting in more now. And, you know, if you look at my Twitter feed, you'd see that I was constantly cautioning people because I did most of my buying personally in around July, August 2020 as the market was just starting to take off in a big way. Bitcoin was still only around 10,000 at that time. And I did most of my selling, as I told my followers, around about $45,000, $50,000. And actually, that's useful to remember because don't forget that we're still about, thank you, we're still about double where we were when I started buying. That was only about 2 years ago. So, you know, Bitcoin isn't doing that badly if you look at it over a 2-year horizon. But anyway, back to those retail traders, painful because they were all getting in far too late. And I was just telling people to be cautious, but they won't be cautious because they get caught up in the whole hype of it all, you know.
So follow Glenn Goodman on Twitter is the takeaway I'm hearing from this. So I do wonder, I love this comparison you draw to the dot-com bubble because we did see a lot of investment going into blockchain, any sort of crypto-related project. If we do enter a crypto winter sort of period, what long-term effect will that have on the industry if that investment dries up?
Well, what I would say is it's been extremely positive that the investment was there in the first place. Because if you think about it, we're talking about extremely risky, small tech startup projects in most cases with cryptocurrencies. And in normal times, you know, if venture capitalists were looking at projects like those, they'd be extremely skeptical, and rightly so. But the fact is that because everybody got so excited and were just buying up anything during the crypto boom, just like the dot-com boom, loads of projects get invested in. Some of them, frankly, don't deserve to be invested in, but a lot of decent little fledgling projects that otherwise wouldn't have got that funding because people would have been too skeptical, they did get that funding, and that works its way through the system even during a crypto winter or a dot-com bust, and then you get the leaders of the future emerging thanks to that investment.
Glenn, thanks so much for joining us. Great to get your take on this. Glenn Goodman is eToro's cryptocurrency consultant, and of course, he's the author of The Crypto Trader as well. By the way, tune in to Bloomberg every Tuesday, Bloomberg Crypto, I should say, at 1 p.m. New York time. Kaylee and I co-anchor that. Tomorrow, we're going to speak with Mary Catherine Lader, the former rising star at BlackRock who defected to DeFi. Very interesting story there. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York. Danny Berger with us out of London. Anna Edwards is off. Now, Tom Keene, co-anchor of Bloomberg Surveillance, the original, joins us now to talk about, first off, Tom, what's your single best chart to start the week?
Well, the single best chart to start the week is where are we? Into the mid-year, into the end of the second quarter. That's on Thursday. Where are we? And it's really a mark, Matt, of how far down we've come in this bear market. And the answer is down, down, down we go. And there's been a lovely 8% bounce. and we're mean reverting. we're almost there to one of the moving averages I use, which is arbitrary, and far more the midpoint of 2 standard deviations of volatility, and we're mean reverting within a mean bear market. Where to from here? Well, we'll have to see.
Well, Tom, probably the perfect day then to have on Lori Calvasina of RBC.
Yes.
I'm really looking forward to that conversation.
Yeah, and she's just perfect to get us started here in the week, Danny. Lori Calvasina here will parse growth and value, and also the allure of small caps and EM. I'm not sure what that allure's like, but there's a lot of different themes to talk about here, just to begin the week. And on yield as well, George Goncalves will join us as well from Mitsubishi. Really looking forward to that with yield 3.17%.
All right, Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much. We're looking forward to that conversation as well. And as for what else we are looking forward to today, I will be watching for Nike earnings after the bell. This will be their fiscal fourth quarter. And it's worth noting, going into the print, analysts have been steadily cutting their profit expectations for this company because they're noting a number of headwinds, including the lockdowns in China that could weigh on sales there. Plus, there's tough comps from a year ago. And as always, guys, we're going to be focusing on the commentary around supply chain issues, as well as any shifts in consumer spending this company is seeing in the face of inflation, as that could be a broader indicator for corporate results, Matt.
All right, well, I'm watching something going on over in Europe. Sintra is a conference in Portugal for the ECB, or held by the ECB, I should say, and central bankers from around the world gather there. They are at a moment, the ECB, where they really need to watch out for rising interest rates and how that spurs on more fragmentation, as we've been calling it a lot lately, which is the spread between peripheral bonds and the bunds. Gianna Randau has a great story on the Bloomberg terminal talking about Christine Lagarde engineering a tool to try and deal with this that I highly recommend people watching. But we're going to be hearing a lot more about the ECB, and I'm going to be watching the euro very closely over the next week.
Yeah, especially considering we have a lot of flash inflation numbers coming out in Europe. We're expected to get a record inflation number at the end of the week. Exactly. I mean, really crazy stuff. If the economy is in danger from gas, I mean, what do? They have to keep hiking, right, if they're going to get that inflation under control. Well, perhaps on a lighter note, today I am watching Wimbledon, probably quite literally. I have to say I don't have my ticket, but I live pretty close to Wimbledon, so maybe I'll just sneak on over later today and try my best to get in. But this is the third Grand Slam where we're not going to have athletes from Russia or Belarus. Serena Williams, she's making a comeback after a wild card entry. Djokovic, he's going to feature in the men's draw as well. I think it'll be a really interesting one. Matt, I don't know if tennis hits your sort of zeitgeist of sports interest.
Yeah, no, I love to watch tennis. Absolutely fascinating. I highly recommend reading Infinite Jest by David Foster Wallace. They talk a lot about pro tennis there as well.
Matt Miller's book club.
Great note to end the show. There you go. It's the Monday edition of Book Club. That's also it for early edition. More surveillance is ahead. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
This Fed is behaving much differently than we might have otherwise anticipated.
We think the Fed will be more restrictive than markets currently expect.
I just don't think that the Fed would keep hiking aggressively when the economy is already slowing and inflation is already coming down.
We haven't been in a situation like this where the Fed is changing their policy narrative so quickly.
If we continue to see elevated prices coming down, particularly from the supply side, the Fed is going to tighten.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
I think I remember how to do this. Live from New York City.
Unlikely.
For our audience worldwide. Good morning, good morning.
Nailed
This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. TK, do you want to do this up front? Get the vacation jokes out of the way with?
Oh, no. I would let him age.
Want to front load it or let it leak through the whole 3 hours?
The difference here, Lisa, is people from Europe go to work to plan their next vacation, where you and I just were in denial about it. And John's already working on the next vacation.
This was about research on the importance of the FX channel for tourism into Europe. Would you like to hear about that research now? Would you like to do the market? It's up to you. I can share some with you.
The Dow's up 110 points. And
I'm sure you let everyone know over the last week, didn't you, Tom?
The Dow's up 110 points. We're, with 31,000 lifting and SPX near 4,000. John, you were away, and there was seriously a bout of enthusiasm.
I'm with you, TK, and it continues on the S&P up another 0.5%. What did you make of that move last week? Equities up, yields down.
Technically, we're off the bottom. I just did the chart with the troops at 5 a.m. And John, very importantly here, is not a lot of technical construction to this rally. It's there. Mike Wilson, the bear, says we're going to revisit that off earnings, but far more, John. It was just a very healthy bounce within a bear market, and it's sort of a we will see end to the second quarter.
This is the question that Mike Wilson is asking this morning coming into this week, Bramo, and I think it's a really important one. You take falling yields and you ask yourself, what's the dominant factor behind that move in bond yields, and what are the implications when it comes to risk assets?
And what does this mean when you come into a recession talk? Does it mean less demand for oil? Do you get an oil decline in an ongoing basis? And does that go commensurate with yields? Have we seen peak inflationary concerns or not? And if you have, then perhaps you go into big tech, which has been the ongoing rally, and frankly, what a lot of people see could drive this bear market rally further.
Did you ever think that the UMIT's reading of longer-term U.S. consumer inflation expectations would move an equity market the way it did on Friday? I mean, come on, is that where we're at now?
That's where we're at.
That's the big data point for this Fed, for this market.
Don't you feel like you missed a lot?
I don't feel like I missed anything with regards to that.
Yeah, and that's basically, I think, how this market feels. I think that it's a breather, and I think people are looking for the next narrative, and there aren't a lot of new ones, and so people are just taking a pause.
Big week ahead coming up. Let's whip through the price action for you, and good morning to you all as we kick off a brand new trading week. Equity futures up 0.4% on the S&P. On the Nasdaq 100 up 6 or 0.7%. Yields in last week on the session this morning, just a little bit higher by 3 or 4 basis points to 316.58. And in the commodity market, Lisa, crude 107.94 90 on WTI, up 0.25%.
Yeah, but still in the broad downward trend, which I find really interesting. Have we seen peak oil concerns? And is that the main driver here, that we could be some sort of softening in demand or the perception of it? There's a lot of different views in this, with Goldman Sachs pushing back. Here's what I'm watching, Tom. This is just for you, 1 p.m. The U.S. Treasury is selling $47 billion of 5-year notes. I know you're thrilled. You're going to be up. You're going to be watching every tick of price action. 5-year yields have climbed dramatically. Will this be the tea leaf in terms of have we seen peak yields? Because that has been underpinning the rally that we're seeing today, last week, and the week before. 1:30 p.m., the European Central Bank's President Christine Lagarde is giving welcome remarks at the Forum for Central Banking 2022 by the ECB in Sintra, Portugal. Maybe we should all take a road trip. I would love to do that. How much do you start to see euro strength emerging from this meeting as they reaffirm their commitment to bring inflation down? And after the bell today, we get earnings from Nike, and this will actually be potentially a tea leaf for the broader economy. It's a retailer which have gotten beaten up, John, as people look to a possible waning in consumer demand. But at the same time, Nike has done pretty well, also facing off with the headwinds of China. Very much a litmus paper in terms of the path ahead, particularly when it comes to forward forecasts.
You know what got my attention this morning? The most European thing that I've seen in ages. The ECB is going to push back its decisions by 30 minutes and push back the news conference by 30 minutes as well. Tom, I can only presume that's about having a longer lunch over in Europe, in Frankfurt, Germany, because there's no details in this press release aside from that.
You know, they just delay the snooze fest. That's all there is to it.
Eastern time for the Central Eastern time, Central European time.
Seriously, they're going to change the clock on that. I missed that.
Yeah, 2:15 local time, and then Central European time, 2:45 for the news conference for future meetings. Anyway, put that in the diary. When it comes to falling yields, Tom, we've got to work out, is it because of peaking inflation expectations or rising recession expectations? I think they're two very, very different stories which have very, very different implications for how this equity market trades. And ultimately, that's what Mike Wilson of Morgan Stanley's writing about this morning.
Well, there's a real tentativeness to the weekend research. I mean, you go through it and there's a lot of different theories, but I didn't see a lot of conviction other than Michael Darda. I really want to emphasize Darda wrote a blistering note last week, and he said, look, inflation expectations, the word he used has come down hard. They've rolled over hard. And I, other than Darda, I didn't see a lot of conviction out there, John.
We start the program this morning with Laurie Calvasina, the head of U.S. equity strategy at RBC Capital Markets. And Laurie, let's start with that bond market. What is the dominant factor behind lower yields in the last week or so? And what do you think the implications are for the durability of this equity market rally?
So look, it's a great question. I'll tell you, our rate strategy team has been looking for that peak in the 10-year yield, and they've thought that as growth concerns and recession concerns built, that it would weigh on that bond yield. And we've actually looked at that as something that could help stabilize the tech part of the market, which strangely ends up being a stabilizing force for the equity market, simply because of the math of the market cap in terms of its contribution to things like market cap and net income. So I think it feels a little bit contradictory in nature, but I do think that is one of the things that has really been giving some stability to market. And I'll tell you, John, as I've talked to investors the last couple of weeks, there's a real focus on the idea that if we get a recession, it will largely play out in the next couple quarters, and we won't have any lasting wounds and scars, and we can sort of get into 2023, still have a decent year, still have decent earnings. And so I think that kind of rip off the Band-Aid now, get through this economic pain, the Fed's helping that process along, that sort of longer term optimism on 2023 is something else that I've actually just seen in my conversations as lending some optimism to investors.
Laurie, you're on the road a lot. I want you to get out beyond 2023 and get away from the strategist game of what's going to happen by next Tuesday. And I want you to look long term. You're more qualified to do this than anybody out of collegiate America. You lived in the most prestigious dorm rooms in America at UVA. I want you to go back to Jefferson and say, how do you do this now for the long haul? How do you stay in the market and not afraid in cash right now?
So look, Tom, I think that when we go back and we look at the history of recessions, what we have to remember is that they do typically beget buying opportunities for longer term investors. And, we get very caught up in my job, with some of my competitors and investors, frankly, on kind of what's the absolute downside, what does the end of the year number look like? But if you actually go back and look over the course of recession, stocks actually go up a little bit if you take the NBER dates. You tend to see these very big pivots. Areas like small caps, these are historic buying opportunities for that smaller, riskier part of the market. So I think you need to keep those bigger, longer-term pictures in mind first off. The second thing I would tell you is I think the conversation about recession, yes or no, when does it happen? That's an important one. But we also, as investors, if we're really longer term, need to be thinking about what things look like on the other side. What's the longer term growth expectation? I'm talking to a fair number of people who think we've exited this hot economy, this above trend economy that was boosted by stimulus. If that stimulus is lacking in this economy, in this economic recovery going forward, anticipate a slower growth backdrop, which does typically benefit the secular growth sectors like technology. Those would be the two things I would focus you on right now.
So, Lori, that brings us to John's point where he started off asking, are these scenarios consistent with each other? This idea of a stagflationary spiral where you get slowing growth in a recession and you also get inflation that doesn't cool materially, and a recession that brings us back to where we were before and then some. So parse out what the difference is and whether there still is a chance of that stagflationary environment.
So look, I think that there are two parts of the same timeline. I think this idea of recessionary fears sort of playing in the here and now, frankly, Lisa, I think that's something investors have already been positioned for. If you look at defensive sector valuations, they're at peak versus cyclical and secular growth. Small cap positioning in the futures market is down below financial crisis lows. So, you know, it does feel like that is still playing out in the here and now, but the positioning in the market already reflects that. That longer term sort of stagflationary type of environment is something investors can still wrap their heads around. So perhaps you don't need to be as bearish on things like energy as you did in the past, even if there are some pressures in the short term. So we're market weight on energy for just that reason. But you also do want to think about sort of that longer term backdrop and kind of how you want to be positioned for that slower growth environment, which frankly, I don't think is going to exit anytime soon. So I don't think investors are being inconsistent. I think they're trying to put on different trades for different durations at the same time.
Lori, awesome to catch up as always, and great to start the week with you. Lori Cavacina there of RBC Capital Markets. Just weighing in on energy briefly. Just go through how we performed last week on some of these energy names. Devon Energy down 15%, Marathon down 14%, Valero Energy down 12.5%. Look at the commodity players elsewhere. Freeport McMoran down 11%. There are problems out there, Lisa. They were the big winners turned losers more recently in the last couple of weeks.
People are basically betting that the rally in crude is over in the face of recession. To your point, John, and I think this is a really good one, if that's the case, doesn't that give a tailwind to the economy? Because it alleviates some of the inflationary pressures that really threw us into this recession fear in the first place. So at what point do we end up in this churn, which is exactly where we are?
We'll give Mike Wilson a final word on the back of that, Bramo. And Tom, it reads as follows this morning. Falling yields and lower oil prices have lowered the terminal rate for the Fed. Last week, the market took the bullish view, which may last a few more weeks before the reality of lower earnings arrives and the bear market resumes. That's the Mike Wilson Morgan Stanley view going into this week.
You were on sabbatical, John. A small startup called Federal Express reported. I don't have those details in front of me, but the answer is they adapted and adjusted to a changing America, and their numbers were actually pretty good. I get the idea there's a lot of earnings gloom out there. We'll wait and see. It's going to be interesting, starting with JP Morgan.
You don't have the detail, Tom, but you just took the opportunity to remind everyone that I was on sabbatical. I can imagine that this is going to continue through this week on JP Morgan, July 14th. Get that in the diary for earnings from JP Morgan. July 13th, you'll get CPI. So CPI July 13th, July 14th, earnings season begins. And Lisa,
I'm having a mermaid
that's the main event
at Coney Island
next month.
John, did you think that you would get rid of the vacation talk in the first couple minutes?
Put it in the diary, Tom.
He's like
Second
George
week of August, I'll be gone again.
He's like George Clooney driving around the Mediterranean. You know,
hey, Tom,
I'm down at Coney Island having a mermaid lager.
I'm driven around the Met. Futures up 0.4% on the S&P from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. For the first time in a century, Russia has defaulted on its foreign currency sovereign debt. That's the culmination of Western sanctions that shut down payment route to overseas creditors. The grace period on about $100 million of interest payments due May 27th expired Sunday. Still, given the damage done to Russia's economy and markets, the default is mostly symbolic for now. Group of 7 leaders will commit to providing indefinite support to Ukraine for its defense against Russia. That's according to the text of a draft statement from their summit in Germany. The statement includes the words, "for as long as it takes." Some G7 members have hinted they might be open to the idea of a negotiated ceasefire. Analysts say that the plan by some G7 nations to ban new gold imports from Russia is largely symbolic. That's because the industry has already taken its own steps. The London Bullion Market Association removed Russian gold refiners from its accredited list back in March. And the billionaire Italian entrepreneur who created the world's largest eyewear company has died. Leonardo Del Vecchio was 87. His company, EssilorLuxottica, bought up brands such as Ray-Ban and Oakley. It has more than 180,000 employees. According to the Bloomberg Billionaires Index, he was worth more than $25 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Our nations and our world stand at a genuine inflection point in history. Collectively, we aim to mobilize nearly $600 billion from the G7 by 2027. We're offering better options for countries and for people around the world to invest in critical infrastructure that improves the lives, their lives, all of our lives.
The President of the United States, the G7, did you notice, TK, no ties for global leaders?
Yeah, I thought, I was wondering if we should go ties today, but I'm not in the mood.
You're not in the mood?
Yeah, I thought, I don't know, I just think that whole thing is silly, but hey, it's a look, you know.
It's a look, but it's silly. I'm not going to go there, but I went there anyway. Futures up there by 0.4% on the S&P, on the Nasdaq 100 up 0.6%. Yields just a little bit higher, TK. 316.21 on a 10-year, up 3 basis points.
Some attended dollar weakness here. We had a resilient dollar through the week, gave it away a little bit here, and you know we'll get into that. Sterling 122.77 is. Prime Minister Johnson may be a bit distracted at the G7 meetings, but others are distracted as well. Amory Horton is having a difficult time down on the Austrian border in Germany, a very historic location that holds her alive with the sound of Anne-Marie. Okay, Amory Horton, it's real simple. The backdrop, are the Russians winning the war?
Well, it depends who you're asking, right? The Russian officials will say that they still have a quite strong hold, but that's very much so in the east. There is some concerns, especially as G7 leaders meet here in the Bavarian Alps, about what happened this weekend. You had a number of missiles attack center of Kyiv. We're talking about apartment buildings of everyday citizens in central Kyiv. So it does seem like they are trying to reboot their assault. But at the moment, what you are pretty much seeing in eastern Ukraine, and these are some of the strongholds that Russia has, is a perpetuation of what we had over the past 8 years. It was in eastern Ukraine that for 8 years, Ukrainian and Russian-backed separatists have been fighting.
Well, they've been fighting, but the backdrop for the G7 meeting, is there an urgency there? Or is everyone, you know, sitting around having a lovely summer afternoon? I didn't sense an urgency over the weekend. I sensed going through the motions.
Well, I would describe this meeting as one of angst. There is a proper discussion about how do they continue to support Ukraine, whether it's humanitarian efforts, defense efforts, with the U.S. will be out with a new front on that, financial efforts, diplomatic efforts. The quote in the communique will say for as long as is needed. At the same time, making sure that all these sanctions they are putting on Russia are not creating even more problems domestically. Every leader here is worried, and Prime Minister Boris Johnson has really made this clear. Every leader here is worried about the anxiety their everyday citizens are feeling, and that is because of higher inflation and higher energy costs.
Anne-Marie, given all of that angst and how much it's tied to Russia, is it surprising that there is so much focus on China and countering the Belt and Road Initiative and investing in other economies as there seems to be?
Well, remember, this is almost like this plan is 2.0. They already announced this at the first G7. It was Build Back Better World. Now it's rebranded. A lot of European leaders were not able to really cough up the money for that. And also, they were quite concerned that the Biden administration wasn't able to get their own Build Back Better agenda through Congress. So now this is rebranded. And you heard the president say collectively it's $600 billion. The U.S. wants to put up $200 billion towards this. But there's a lot of questions. How much of this is going to be divided between private and public investment? What countries will these going to? We definitely know low and middle income. But the Biden administration came into this presidency that they wanted to counter China multilaterally. different from former President Trump, who really took a unilateral stance against China. So they are just trying to reboot this effort to do so. They are not going to take their eye off of China while they're still dealing with this crisis in Ukraine and the Kremlin.
Anne-Marie, there were a lot of articles written about the U.S. leadership after some of the Supreme Court decisions, the one on gun rights and the one on abortion. How much, from the conversations you have, are these topics actually dominating the conversation and throwing the U.S. leadership into question if there is such a divided populace?
Well, at the G7, this is not something that's being discussed, but it does feel a bit awkward for the U.S. president to set foot amongst all these other leaders, which many had come out and said. UK Prime Minister Boris Johnson says this is a step backwards. So this is an awkward moment for the U.S. president when his peers are saying, we think the United States is taking a step backwards when it comes to women's reproductive rights. So domestic agenda for all of these leaders is looming large on that. Yeah. But I would say specifically for the President of the United States, before he got on that plane, he was asked, do you think the Supreme Court is broken? And he said, I think they made some terrible decisions.
AMH, that story no doubt continues, and we'll confront him when the President comes home later on. Anne-Marie, over in Germany today for the G7 meeting, and I don't want to let this one slip. We need to talk about a Russian default as well, and that default has inverted commas. The Russian finance minister called the default label a farce. Of course, anyone who's not been following this, the grace periods on 2 Eurobond coupons expired on Sunday, so some people consider that, Tom, a default. But Lisa, this is utterly bizarre in many ways because it's pretty original. It's not many times you get to say a country is defaulted when they have both the ability and willingness to pay. And Russia would say they have both the ability and willingness to pay.
So there are two sides of this. There's some people who are saying this weaponizes the financial system and it sets the U.S. In a perilous course. There are other people who say this is a new world order where there has to be some sort of financial penalty. And if a company in a country cannot play ball nicely, then they cannot be allowed to play by the rules and play in the same sandbox. How much is that what's going on? And how much does this really provide a game changer in terms of sovereign defaults? That's what some people are saying.
Can technically be forced into default.
Right.
Tom, what do you make of this?
I see a red band across my Bloomberg terminal. There it is. I look at the Russian 2042, and you can look at any others as well. And there's a red band with a little warning sign. This is something every terminal user of Bloomberg sees. Sanctions apply to this security. And that's just what they are, John. They're sanctions. And what the West is basically saying is, Mr. Putin, if you want to run over Ukraine, you don't get to play. It's as simple as that.
So the West gets to pick and choose who defaults on their debt, regardless of whether they have the ability or willingness to pay.
This is what sanctions is about. I mean, it's just as simple as that with a ramification. I guess the only ramification is when they come for new debt at some point, what do?
Well, precisely, what would the consequences be, Lisa, further down the road for countries that want access to capital markets, but ultimately, if they do default, they want you to come down to the two basic things.
Right.
Ability and willingness to pay.
And what are the consequences in terms of the dollar as the reserve currency? How much do people try to diversify away from that? We're not seeing it completely. We are on the edges when you look at some of the balances, but the dollar has actually strengthened. Yep. And this has been the main counter argument to so many people who said this would undermine the haven status of the dollar.
It's not easy to get away from the dollar, though I have to say I did not expect to see dollar ruble in the 50s. Tom, 3 months ago?
No,
2 months ago.
State. Well, it's the money they're bringing in. They're, from India, China, and the rest.
Yep.
They're bringing in gazillions of dollars.
In a big way. Futures up 16 on the S&P, up 0.4%. From New York City this morning, good to have the team back together. Heard on radio, seen on TV. This is Bloomberg Surveillance.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Live from New York City this morning, good morning to you all. The inverse correlation between bond yields and this equity market, pretty dominant last week and very well understood. Your equity market up again this morning after moving higher by more than 6 percentage points on the S&P. We're positive by about 1/3 of 1% on S&P futures, on the NASDAQ up by 0.4 of 1%. Equities up, yields lower. That's the story of last week. 2s, 10s and 30s look like this. 2s and 10s down last week by somewhere between 10 and 11 basis points. Your 2-year yield well off the highs of mid-June, down from 3.45 to somewhere in and around 3% at 3.083% on a 2-year. But I think we have to get away from the surface level stuff, that correlation between bonds and equities, and talk about the why yields were lower and what the implications are for this equity market. Are yields lower because of rising recession expectations or peaking inflation expectations? And those two stories are very, very different. What is the dominant driver of that move lower in yields, and what does that mean for this equity market? Because if it's about recession fears, then we've got a pretty weak earnings story coming up down the road that we need to talk about. We also need to talk about the week ahead as well, and I think euro-dollar captures that almost perfectly. On the euro side, you get the inflation story out of Europe and France and Germany later this week. On the US side, you get the ISM number, which we'll all be looking forward to, and a really important panel, TK, coming up later this week in Sintra, Portugal, when you'll hear from Chair Powell, President Lagarde, Governor Bailey, and Francine Lacqua sitting on the end, interviewing all three of them, Tom. I'm looking forward to that. I know you and Lisa are too.
Yeah, I got real mixed signals about that. I mean, I don't know what else they can say other than to be massively data dependent. Like, you see a rally in the euro, and I see that out to 105, but I also look at what Draghi's got to do without a tie on, what Draghi's got to do in Italy with the Italian lira. And I look.
We're calling it the Italian lira now.
Quote now of the Italian lira at 1830. And, I really just, I think, even if you go to Europe, you don't just look at euro, you look at each individual story, and maybe that's what we're going to do this week when we look at the Italian lira.
Thanks for that, Tom.
Quoted off the Bloomberg
I think
terminal
you're trying to wind me up
1830.
somehow, and I'm going to ignore it. I think you've touched on something important, though. The tension between the three of them could well be in the FX channel. Tom, not everyone can have a stronger currency, but at this point, I would argue that Governor Bailey wants one, President Lagarde needs one, and right now Chairman Powell has one.
We will have to see. Futures up 11, Dow futures up 61. George Goncalves with us now, head of U.S. macro strategy at MUFG. George, I don't even know where to begin with a fixed income view after the nudgy week we had last week. What is your theme into mid-year? An open question.
Look, I think John hit the nail on the head with the opening that it really comes down to this balance between recession versus inflation fear. In the bond market, I mean, especially longer term rates, I think are picking up on the recession concerns more so. The front end will still stay under the guidance of the Fed, and the Fed has still a clear and present danger on inflation, and they've been behind the curve. So I still think that ultimately this curve will probably invert, but probably for more kind of issues around market sentiment later on in the summer and into the fall when we start to really price in that earnings recession.
What is the distinction of looking out 5 years and not 10 years? Over the weekend, I saw a lot of literature focused out 5 years and not the convention of 10 years.
Well, look, I mean, it's kind of a pivot point. I mean, I think that, we're typically used to 7 to 10 year cycles. We're about 2.5 plus into this one, if you roughly. So if we were to make it to 5 years as a business cycle, which I still think is debatable as an expansion, I do think the recession risks are pretty high. We're at 60% as our base case here. So we do think that recession risks, even if it's a mild one, if it's a small R, the 5 year will start to pick up on that and will rally harder.
What do you think the Fed's response is going to be if inflation comes down, but not that much? If there is a sense that we are heading into a recession, that we're going to see earnings that are lower, but inflation is still sticky given some of the inputs that aren't going away so quickly?
Well, I think central bankers all around the world will have to give us a big mea culpa at some point. Between now and Jackson Hole, I would envision that they're going to really start to explain why they got inflation so wrong. So I do think that between now and really September, we'll start to see why they were missing what was going on in inflation. And if they start to kind of give us what they're looking at going forward, they'll kind of regain some of that credibility, as well as, all the hikes they've done so far. That I believe that, they'll be, looking for the turn. Of course, I mean, inflation has to stop heading higher to begin with. But they're going to look for certain components, and I think that's what they're going to clarify in the weeks and months ahead.
The reason why I ask this is because we're talking about the two aspects of what we're seeing in markets right now, either slowing growth, leading to potentially worse earnings, or inflation rolling over, which could actually give a tailwind to the economy. But as Lori said, are these the two sides of the same coin? If you start to see, for example, recessionary signs, but inflation isn't rolling over that quickly, if the Fed hikes rates, couldn't we end up with stagflation in the short term, a recession in the long term, back to low growth?
Either or, I mean, depending on how you want to look at it, you can get a small recession and then end up with a stagflation on the back end too, right? So it really depends. I mean, the Fed having to stop and not really know if they really have put inflation back in the bottle. I mean, is that 5%, 6%? Is it 4%? I mean, that's on the headline number, and on the core, it clearly should start turning lower into the end of the year. But again, we still have 3 to 6 months to make that judgment.
But the core, this is the key thing, George, in terms of all the analysis and frankly getting to July 27th and the next Fed meeting, the core inflation analysis, whether it's PCE, TRIM, Cleveland, whatever, the core analysis is the heart of the matter.
That's right. And look, the thing is, there's these kind of long lead lag times on certain of these some components, especially on the owner's equivalent rent, as well as what's going on in travel and things like that. But that should all kind of work its way through the summer. I mean, headline, highly dependent on energy prices, which could get a respite here depending on what's going on globally. But it is kind of this give or take between recession and inflation, because if we do get a slowdown, that should curtail inflation over the long haul. And in fact, every single major spike in inflation has been fixed with the recession. The question is it a big R or small R?
Can you make money in bonds now? I mean, if it's big R, small r, and you believe in price up, yield down, I guess that's a money-making opportunity in your world. But is it?
So the tricky part being, obviously, we don't know exactly if we're in the the 8th inning versus the 6th inning. I think we're closer to the 8th inning, especially on long-term rates. I mean, the tips curve and the way the break-even curve is forecasting. I mean, the bond market is clearly saying the Fed has credibility over the medium-term, long-term, and they're going to put, inflation back in the bottle, and that could cause a slowdown. Again, we're envisioning more of a small R or really shallow growth in the next year. But either way, that's usually really supportive for the fixed income market. We've had one of the worst quarters, if not the worst first halves of the year. I mean, we went 120 basis points from the low. We started on March 31st, 230. We got as high as 350. I think now people are going to look up and say, 350 is an interesting level if we ever get back there again.
Okay, so have we seen peak yields, George?
I think we're close to peaking yields. I mean, look, I think the problem being that from 250 to 325, there was really no technical supports in the short run. Then we broke above that, and really, that was more like that probably was the cathartic move for the bond market. We haven't seen an equivalent one in credit as well as in equities. It's been very orderly in risk assets, and in bond market, liquidity, and it kind of felt unhinged a little bit last week when we had that move towards 350, but it didn't stay there. So I do think that we're getting closer to a top.
Hey, George, awesome to catch up. George Goncalves there of MUFG, and the market's picking up on this. We had a peak in a 2-year yield on June 14th. We had a bottom in the NASDAQ 2 days later. And clearly we're starting to question how far this Fed can go, not because inflation is going to recede, but because growth is going to be a problem. And that's the dominant factor between what we've seen so far in this bond market and how it's influenced the equity market. So you've had this big rally in the NASDAQ, and what's rolled over, the energy part of the equity market has rolled over in a brutal fashion, Tom, in a really, really big way. If you pick out some single names, pretty ugly. And I know they've had a wonderful year so far, a fantastic year to date, but just some weakness emerging in a more concentrated way over the last couple of weeks.
I'm correlating on my Launchpad, the Bloomberg screen that we use, John, the commodity index, which rolled over, as you say, and frankly rolled over with a vengeance, with the financial conditions index, which I should point out is still one standard deviation negative. That's some real stress in the system. So it's competing forces now as we go into mid-year. I saw a lot of tentativeness in the notes over the weekend, John, except for Michael Darda, who said flat out, inflation expectations has shifted.
And if inflation's come down, work through it with me, Tom. Are they coming down because growth is getting hammered, or because the supply side story is improving?
It could be either, or it could be both. I would suggest, and Liz Ann Saunders has followed this really well at Schwab, I would suggest the supply side story is clearing up a little bit. But is that dominant? No, I think it's more about the recession betting game, which frankly bores me.
That bores you, Tom?
Why
does that bore you?
It bores me because there's no research here. You can predict what recessions do or the magnitude of a recession. While you were gone in your sabbatical, John, there was clearly a magnitude debate about recession.
I'll tell you someone who it doesn't bore. Introducing, drum roll, Bramo.
Yeah, well, I especially don't find it boring at all because of what George said. Our central banker is basically going to take a sledgehammer to inflation and keep raising rates no matter what, even in the face of diminishing growth, simply because they don't want it to become entrenched. They don't want to see it rear its head again and not get control over it and then lose credibility. Or is the Fed going to take a signal from some of the growth rolling over and back off? And those are two very different scenarios, and we don't understand that dynamic. That is a question we could have answered in some of these meetings.
What did Mary Daly say on Friday? The San Francisco Fed president. 75 in July is where I'm sitting. That's where I'm starting. 75 in July. And it's not just the Fed, it's the Bank of England too. This quote from Jonathan Haskell of the MPC at the Bank of England: we won't be, quote, wimping out on inflation. We won't be wimping out. They're pretty serious that they've got more work to do here, Lisa.
They all have memories of what happens when they don't do that, when they don't get it under control. And there's a credibility concern after what happened not going quickly enough, and people seeing data that came out that even Jason Furman, the former advisor to Bill Clinton, came out and said, this is terrible data. We need to really get this under control. They are facing off with a credibility crisis that undermines the potential prospect of the central bank in general, and they don't want that to happen.
Equity futures right now up 1/4% on the S&P 500, on the NASDAQ up 0.4%. Trying to keep Tom interested in the debate of the moment.
I'm interested in, like, what I want to know is, when I go to Italy, do I think in Italian lira or do I think in euro? And frankly, I think, USD ITL is one way to look.
Is that what you're trading,
if you do that, you can stay there for a sabbatical.
That's how you confuse people. Should I tell you? I'll make it easy for you, Tom. You just go there, and in your mind, euro's basically a parity. So you just change the currency, and that's what it looks like in your head. Tom, do you know how many American accents I heard on the Amalfi Coast?
Really?
Full of American tourists.
It is.
Taking advantage of euro dollar at 105.82.
And a lira at 18.29.
Thank you for that, Tom. You know, some people think that's trading somewhere.
It is.
Okay. From New York, this is Bloomberg.
Off your face.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. A group of 7 nations are expected to agree on exploring a price cap on Russian oil. The goal is to limit a key source of revenue for Vladimir Putin for his war in Ukraine. Bloomberg's learned that a potential mechanism would work by imposing restrictions on insurance and shipping. Commodities are hitting powerful headwinds after a first half dominated by the supply turmoil and inflationary shocks. Bloomberg's index of spot commodities has fallen 13% from a record. Still, Goldman Sachs says prices haven't toppled out just yet. In a new note, Goldman analysts say that growth and demand are slowing down but not falling. Bloomberg's learned that China plans to extend trading hours for the yuan. Beijing wants to increase global investor participation in onshore currency trading as part of its internationalization push. People familiar with the matter say trading will close at 3 a.m. the next day instead of 11:30 p.m. local time. Boeing 737 MAX jets reportedly experienced at least 6 emergencies during flight and were grounded dozens of times in the year after they were returned to service. That's according to the Australian Broadcasting Corporation. Boeing says none of the incidents indicated a trend. The 737 MAX was grounded after 2 fatal crashes. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
We're seeing price increases beyond energy on food and elsewhere in the economy. Therefore, we discussed how to mitigate the economic and social impacts, especially on the most vulnerable of our societies. This starts with being adequately prepared to deal with potential further disruptions in deliveries of Russian gas to Europe.
These leaders have a big problem, and for Europe, it might become a bigger one by the end of the year. That was Ursula von der Leyen there, the EU Commission President. From New York City this morning, good morning with Tom Keane, Lisa Abramis and Jonathan Ferro. An equity market rally that continues, building on the gains of last week. Equity futures up by 0.25% on the NASDAQ 100, up by 0.4. Commodities are the epicenter of a lot of this, TK. Crude, 107.85. We're positive, just 0.2%, and we have backed right away, all the way away from the highs of the year so far at 107.
Interesting to see going into the week and the data. John, I must admit the ISM, which I never paid attention to, I got to admit it's going to be fascinating what we see July 1.
PMIs were weak last week, Tom. PMIs were not impressive last week.
Yeah. It's going to be interesting to see. Here's what we're going to do over a weekend of emotion for America and for our international audience. It's difficult to calibrate the importance of the decisions, plural, of the Supreme Court. We're going to go to the expert. Mohammed Yunus is editor-in-chief at Gallup. They've been doing it longer. They've been doing it more measured. They've been doing it deeper and measuring the pulse and cadence of America. Mohammed, I thought Kate Zerinke in the New York Times was spectacular this weekend on looking at the state legislatures, the revolution of 2010, which was very much like Gingrich in 1994, in the fabric of America. And I want to go to a phrase that you know, which is trifecta America, which was when a state is entirely Democrat or a state is entirely Republican. Does Gallup presume that we will stay as polarized as we are now and frankly become ever more a trifecta America?
That's a great question, first of all, Tom, as always. There's no doubt that America is politically more divided since we started measuring it in the 1930s. There's been no sign during these past months of the Biden administration that that's improving in any way. However, we do ask Americans whether they prefer this kind of trifecta setup, at least in Congress. And what we find is that Americans, actually the majority of them, prefer a divided government. They prefer there to be balance between the two parties. But this decision, like you said, Tom, it really can't overstate the magnitude of upending 50 years of settled law in the United States, and the reaction has been massive.
A completely unfair question, but I'm sure you will gauge it. What is the belief in America in the Union, almost a Lincolnian Union, back to 1850, 1860? Do we believe in union, or do we nudge towards some form of separation?
Again, we've never asked that specifically, but I would say that the union is still intact and will remain intact. And I say that because Americans are overall pretty positive on their own lives and on their local government. Americans are very disappointed in national government. And that's really where we've seen the most declines in confidence in institutions, in the Supreme Court, in Congress. Overall satisfaction in the United States hasn't been over 50% in over a decade now. So Americans are very down on their national government, but there aren't signs necessarily of, dissolution of the union in public opinion.
And Mohammed, there does seem to be a galvanizing of local elections. However, people are looking to the national elections, to midterms and beyond, to understand the overall trajectory here. Do you have a sense of whether some of these social issues could overcome inflation and economic issues as the main voter preference or motivator going into the midterm elections?
Well, if you would have asked me that on Friday before this decision came out, I would have told you that's very hard to believe. Now, it's an open question. It obviously depends on how bad inflation and the economy really gets for Main Street moving into this election. But right before this decision, we asked Americans how important abortion was to your vote. And we did see an uptick in those that said they would only vote for somebody who shared their views. It's also important to remember this decision is not popular in America. 6 in 10 Americans did not want to see Roe v. Wade overturned. 55% of Americans describe themselves as pro-choice, and that's been on the increase. So over the past couple of decades, America has really moved, if you will, to the left on abortion. And now this decision by the court is really out of step with public opinion. Not that it's the wrong decision. That's not the basis upon which the court makes its decision. But we know this is not going to be a popular decision with the public.
Mohammed, just a final question for me. Do you find that is coming up in more than one topic on several fronts? We often talk about this country being very divided But on certain issues, it's really not. It's just Washington, D.C. that's very divided down party lines. Do you sense that's becoming a bigger issue across a range of issues?
Actually, no, but these are the kinds of issues that really can. These social issues can really, really become a focus and can divide communities, and we've seen that in the past. But overall, Americans are rather positive on local government. They are not seeing their state governments as nearly as negatively as they see the national government, and that really now goes across the board. The Supreme Court, just before this decision, after the leak, hit a record low of 26% confidence in the general public. In the 90s, that was much more close to sort of 60 or 70%.
Mohammed, wonderful to catch up, to get your views and the data too, off the back of your polling. Mohammed Yunus there of Gallup. A difficult few months ahead, maybe even longer, Lisa, for this country, trying to settle some of these issues going into the midterms later this year.
And whether that will be one of the main motivating factors for a lot of voters to go to the polls. You raised an interesting question, John, about whether the center is bigger than some people think and whether things have been moving away from Washington. And I point to corporate America. I point to Starbucks, Tesla, Yelp, Airbnb, Microsoft, Netflix, all of these companies that came out and said that they would pay for their employees to travel into other states to get abortions. Now, whether they will come under the target of Washington, D.C. is a good question. But the peril of companies to weigh in on this is interesting, and whether they decide to or not highlights the court of public opinion, as you say, that I find really interesting.
Do you think we fully understand the legal ramifications of some of that effort over the last week?
Absolutely not. And every article that I was reading said that teams of lawyers, without a doubt, are meeting right now to understand the implications, the ramifications, and a lot of companies are remaining quiet because it is such a divisive issue. They don't want to get into the crosshairs of this.
TK, the legal aspect of this is highly, highly complex, as Lisa points out.
It is, and again, we've got the test case of Disney. I saw just within the zeitgeist, I can't cite it, John, I'm sorry, but the leader of Disney is in contract discussions with his board this week. And maybe I saw this in Variety, but Disney down in Orlando was really the first test case of this on any numbers of these social matters. And I agree with Lisa, this is going to be front and center for the Bloomberg world to study this week. I mean, we're here right now.
Futures right now up a third of 1% on the S&P, positive 11 points on the Nasdaq 100, up around about 46, call it 47, up 0.4%, building on the gains of last week. Yield to last week a bit lower. Today, higher by 4 basis points to 3.17 on a US 10-year. Crude positive 0.2% at 107.80, and euro dollar big week ahead for the central bankers, a whole range of them speaking, including President Lagarde, Chairman Powell, and Governor Bailey in one panel hosted by Francine Lacqua in Sintra, Portugal later this week. Looking forward to that one. Live from New York, this is Bloomberg.
The end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya.
Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This Fed is behaving much differently than we might have otherwise anticipated.
We think the Fed will be more restrictive than markets currently expect.
I just don't think that the Fed would keep hiking aggressively when the economy is already slowing and inflation is already coming down.
We haven't been in a situation like this where the Fed is changing their policy narrative so quickly.
If we continue to see elevated prices coming down, particularly from the supply side, the Fed is going to tighten.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equities up in a big way last week. We add to those gains. Futures TK up 1/3 of 1%.
It's the way we're doing it. There's a quality here. There's certainly big action in the technology companies where you're up 8%, maybe they're up 9%, 10%, etc. There's some summer distractions here, maybe Tesla, Twitter, and all that. But you mentioned in the last hour, John, the energy certitude, just a whisper of that disappearing last week.
Tom, take your pick. Devon Energy down 15% last week. Yeah. Marathon down and down hard. All of those names have been absolutely hammered. So we've got to ask why yields lower over the last week. Is it this optimism about inflation peaking and fading, or is there a problem with growth?
You know, I know you didn't see the recession, John, in your sojourn in the Mediterranean, but the recession fears, I mean, Lisa, was nonstop all week.
Bramo, getting busy.
No, and then let's just be very clear, because I get hate mail sometimes. You wish for a recession.
I get it all the time.
Sure. I hate hate mail for being too gloomy. And the reality is, everyone's hoping for a soft landing, and then people say, what does that mean, right? What does the recession mean? And last week was the week of meaning, and perhaps we're going to get a softer slowdown, a shallower recession. Taking a step back, it is a quiet period, and people are reassessing whether we've moved too far or whether this is actually the reality in terms of how high yields are going to go. And I think that reassessment is the pause that we're feeling right now.
Did I miss a very philosophical week last week?
Oh, it was extremely philosophical.
Deeply painful.
Yeah, Dow Futures up 95. But, John, seriously, the partition here is important. There's parts of America that are flat on their back with this really, really difficult recession. And then I know you saw it. I mean, you go to Terrazzo Brunella, on the Amalfi Coast, and you sit there and you have the dinner and you have the fettuccine al limone, whatever the al limone. That's it. It's 54,000 lira, John. I mean, the place is packed, right?
Did you practice this last night?
Yeah. Was it packed?
I came into work this morning.
What do you think?
I can tell you that the Amalfi Coast was packed.
It was packed. I mean, there's this polarity.
I know you're making a big effort to make me look immensely out of touch as you talk about what's happening with inflation, so I'll move things on. Equity futures on the S&P 500 up 0.4 of 1%, on the Nasdaq 100 up 59, call it 60 points higher, up by 0.5 of 1%. I can just say I wasn't alone. There were a lot of other Americans with me, and the airports were absolutely packed. packed, Lisa, in a massive way.
I will just say that last week you missed Tom talking about inflation through the lens of a lobster from Maine being $80. Lobster roll.
Out of the three of us, who's more out of touch? I mean, that is not even open for debate.
Come on, Lisa, $41 for a lobster roll.
Oh, yeah, that's 41.
You take the clan to the lobster shack. It used to be short money, like, 20 bucks was living large. Now it costs $200 to take a family to get a damn lobster roll.
So if you're looking to get a lobster roll, perhaps you should have an auction. And that's what the U.S. Treasury Department is going to do at 1 p.m. That was a segue, right, Tom?
That's a very good segue.
Right, so the U.S. Treasury Department is selling $47 billion of 5-year notes at 1 p.m. today. I'm interested to see this whole conversation around peak yields. Where do the buyers come from? Is this just a pause, or do you get a rip-roaring auction where people all over the world come in to buy? Is this a signal that there will be more to come as people pile into duration? Does a 5-year really count as that? 1:30 p.m., the kickoff of what we've been talking about with ECB's Christine Lagarde giving welcoming remarks at that conference in Sintra, Portugal, where she and other central bankers from around the world, including Jay Powell, will meet on Wednesday on that panel with Francine Lacroix. We will not be missing that. And at 4:15 p.m., this is really something that I think is going to be a hidden tea leaf in the day. Nike's earnings are coming out, and they're going to give a sense of the consumer going forward. They're going to give a sense of supply chain disruptions from China. They're going to give a sense of what they're expecting in terms of profits and margins for the rest of the year. How much does Nike serve as a bellwether, John, for other corporations, in particular the retailers in the United States?
Lisa, thank you. It's good to be back. I meant that. A little bit.
That was convincing.
A little bit,
really, we weren't convinced by that.
I don't know.
Wasn't much of a welcome, was it? Let's be honest. Kristen Bidley's happy I'm back. The head of North American Investments for Citi Global Wealth Management joins us now. Kristen, just reading through your notes, here's the quote that just jumped off the page for me. Unfortunately, we do not believe that inflation will fall fast enough for the Fed to recognize the cumulative impact of its actions in time to moderate its policies. What's the bottom line then for this equity market rally we're looking at on the screens over the last week?
The bottom line for this rally that we're seeing is, unfortunately, I think we're going to see continued volatility. And this type of price action is quite normal in bear markets. This is why we're big advocates against market timing, because when you see some of the worst performance in markets, some of the biggest drawdowns, they tend to be followed by then the best days. And so if we look at over the past 50 years, we did an analysis. If you were just out of the market for the 2 best days of each calendar year, you erase your per annum returns by over 9.6%. It's basically an 80% reduction in returns. And so in these types of markets, you need to expect that type of volatility. And this right now, I think last week, I think we saw some short covering, we saw some defensive buying, but I don't think we're turning a corner until the market knows that we have definitively avoided a recession. We're not there yet.
We will stop the show here, folks, because what you just heard from Ms. Bitterly is the single most important thing of the first half of 2022. Let's revisit it, Kristen, and this goes back to Capital Guardian Trust, American Funds in Los Angeles, and their landmark research 50 years ago. How many days, if I'm in cash, do I need to miss before I destroy my return because I didn't get the few ginormous days? Say it again.
So 2 days, just 2 days out of the market, and basically you've erased the majority of your per annum returns. And that's over, again, we've looked at a 50-year period. Now, sometimes people ask the question, well, what's the probability that I could actually pick those 2 best days and just be in for those 2 best days? And unfortunately, you're better off playing the lottery. So that is no longer an investment strategy. That is pure speculation.
So, Kristen, that's the argument against cash. The other argument on the other side is there are certain parts of history that are aberrations, including the Great Depression, where nothing works and where everything loses, including 60-40. How do you discern that type of period amid all of the gloom that we're hearing out of strategists?
Yeah, so I think we have to look at actually some of the historic anomalies that we've seen year to date. So one of the historic anomalies that we've seen is the fact that this is the first time in history that we've seen both equities and bonds decline by more than 10% over a 6-month period. So to go throughout history and try to find other examples of when have we seen this decline in tandem, we use the threshold of 4.5%. And we've seen that there's been 5 other situations in history where you've seen that in tandem decline of equities and bonds by more than 4.5%. In the 6 months following, in 5 out of 5 of those scenarios, Fixed income was higher with an average total return of around 10.9%. Equities were higher only in 3 out of those 5 times with an average return of 5.5%. So right now, I think while many people are questioning whether the 60-40 portfolio is dead, over a 5-year rolling period, with the exception of the Great Depression, we haven't seen a negative return of the 60-40 portfolio.
So, Kristen, just to pick up on what you said, not just for 60-40, but more specifically where you have a little bit more confidence, is it in the bond market relative to equities
Absolutely.
or equities relative to bonds?
I think you need a balance there, John, but I think bonds have been so out of favor, which is why we're talking about bonds more. So just 3 years ago, we had, over 40% of the world's government debt was negative yielding. That's now around 10%. 10%. So the seismic shift that we've seen in rates and the comfort in adding quality fixed income to our portfolios. So we're looking at the muni market, where depending upon what state you're living in, you're getting taxable equivalent yields in the ballpark of 7 to 8%. Investment grade fixed income, where you're actually seeing priced into some of those spreads around a 40% chance of a recession. So it's not ignoring that probability. So that's where we've been adding exposure over the past couple of weeks.
Kristen, this was awesome. Thank you. Kristen Bidley there of Citi Global Wealth Management. And not the first time I've heard people getting more and more excited about fixed income, relative, of course, to the boredom of the last 10 years for many people. And Lisa, you're part of that story too. You're talking about fixed income in a way that you haven't in a long, long time.
If I wasn't, then I would be hypocritical, because I was talking for so long about how you were not getting any yield. All of a sudden, you are getting yield, very much so. And unless you believe that we're going to hit some sort of inflationary spiral, it makes sense for the first time. Now, where and exactly how, I'm going to leave that to the pros in terms of what the recommendations are. But I understand that argument, because over the long term, unless you see a sea change in the way that we do business, it makes sense.
Tom, what do you make of this?
What I make of it is, and while you were gone, John, I was remiss on this. We did FedEx earnings, but we really didn't cover it. How many other FedExes are out there? Kristen Bitterly's wonderful effort there on missing 2 days of the year. FedEx sees low single-digit package volume. They expect to raise package prices above inflation rate. They're going to contribute to their pension plan. They're going to repurchase $1.5 billion, blah, 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 margins rising at ground, etc. FedEx is up 28% off the bottom in early May. Are there other FedExes out there?
So, Tom, it sounds a little cliche, but it sounds like you're going back to that old line. It's about timing the market, not timing the market.
I can't say enough about it. It's wildly asymmetric. We make a joke about triple leveraged all cash. The hardest part is massively asymmetric, John. It's not getting out of the market. It's when to get back in. Behaviorally, that is a battle each individual faces.
The fear around single names right now going into earnings season in a couple of weeks,
yes,
though, and it's pretty clear. We've been conditioned by what we've seen over the last few weeks with the likes of Walmart, the likes of Target, stories that should have been obvious. They were very well understood. They were very well talked about, but at least we found out pretty quickly they were very poorly priced.
And the visibility is just not there. That is what we have learned. Do we get greater visibility? Do we have a sense of whether supply chains are really getting fixed, or whether it's just the sea change in whether or not there are lockdowns in China?
Futures positive, 0.5%. From New York, with the Nasdaq 100 up around about 0.6%. And TK with throwback market checks, taking a look at the Italian lira. Real helpful stuff this morning, Tom, I've got to say.
It's very, I think it's good. I mean,
your board has the Dow on it, the Italian lira, the drachma, the Deutschmark.
It's good. I mean,
the ruble.
When you're pricing the Gambaroni Grillata, it's 60,000 lira.
Nice.
Those prawns, John. I mean,
1961.
I'm having a hot dog at Ruby's on Coney Island, and you're having prawns overlooking
You're not
the
bitter
Bay
at
of
all, are you?
Naples.
From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The US will provide Ukraine with an advanced missile defense system. It's called NASA AMS, a medium to long-range surface-to-air missile weapon. It's the same system the US uses to protect the airspace around the White House and the Capitol. Currently, Ukraine can knock down only a fraction of the missiles that Russia launches. For the first time in a century, Russia has defaulted on its foreign currency sovereign debt. That is the culmination of Western sanctions that shut down payment route to overseas creditors. The grace period on about $100 million of interest payments due May 27th expired Sunday. Still, given the damage done to Russia's economy and markets, the default is mostly symbolic for now. Analysts say that the plan by some G7 nations to ban new gold imports from Russia is largely symbolic. That's because the industry has already taken its own steps. The London Bullion Market Association removed Russian gold refiners from its accredited list back in March. A new poll suggests that a majority of Americans disapprove of the U.S. Supreme Court's decision overturning the constitutional right to an abortion. According to the CBS News survey, 59% oppose the ruling, including 67% of women. Whilst 78% of Republicans support the Supreme Court action, 83% of Democrats disapprove. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg